Okay. So the last one in WTO discussion is the Geneva Ministerial Conference. That is the recent ministerial conference, which is the 12th ministerial conference. So few important things which we will remember here. Okay, so Buenos Aires, there's nothing significant that happened. Okay, but here one was with respect to agreement on COVID-19 vaccine production. Agreement on COVID vaccine production. So WTO members agreed to waive IPRs, intellectual property rights. They have agreed to waive IPRs on COVID-19. Okay, so without the permission of the patent holder, okay, there is this waiver given for a period of 5 years. This was accepted. This was accepted in the Geneva Ministerial Conference. So Geneva is important because that is the most recent one. Okay, so recent ministerial conference. So that is one important aspect. Okay. Of course, this was on a lighter side in comparison to earlier what India and South Africa were asking for. We were not just asking for vaccine waiver, but also with respect to the other aspects related to COVID. Okay, for example, when we talk about the methodologies used for testing, okay, therapeutics, etc., all that was we were asking. But it was a lighter format where only vaccine waiver was given up to 5 years. Then there was also discussion on curbing harmful fisheries subsidy. There was also discussion on curbing harmful subsidies on unregulated and illegal fishing. Unregulated and illegal fishing. So for the next 4 years. But of course, traditional farmers, artisans, etc., they were given exception. Otherwise, they were curbing harmful subsidies. Okay, why you have to curb these harmful subsidies related to fishing? This is basically, it was leading to unregulated and illegal fishing, which is not good for the environment. And from the beginning, there was this discussion that these fisheries subsidies have to be regulated. Okay, so India ranks 3 with respect to fisheries production recently. So this was in news. Okay, so, and one more important aspect, traditional farmers or artisanal farmers, these people are exempted. They will be getting their subsidy. So India could get that leeway there. Okay, third, there was also a discussion on e-commerce transactions. There was also a discussion on e-commerce transactions. E-commerce was also part of new issues that was discussed in the Nairobi Ministerial Conference. That was discussed in the Nairobi Ministerial Conference. Okay. So e-commerce transactions. So India asked WTO members to review the extension of moratorium. They've all decided to extension of moratorium. Extension of moratorium. Okay, so extension of moratorium. That is, there was no customs duty that is levied on e-commerce transactions. And that waiver is given. And India was asking, why are you giving so much of waiver? Okay, and review it as early as possible. But they have decided, member countries have agreed to continue that moratorium of not levying customs duty on e-commerce transactions up till March 31st, 2024. Okay, or the next ministerial conference, whichever is earlier. So these are the main areas that were discussed during the ministerial conference, Geneva. Okay, India obviously has raised some issues. What are the issues raised by India? India was asking a permanent solution with respect to public stock holding. As usual, we were asking a permanent solution with respect to public stock holding. Okay, and India was also focused on reserving special and differentiated treatment. Special and differentiated treatment. Okay, so continue that. Okay, so and allowing India to export food grains which are there as part of our publicly held stocks. Suppose there's excess food grain which is there in the go downs, so you should be allowed to export these. So India was also talking about this. So these are the main ministerial conferences. So we can't remember everything, but few are important as we have discussed. Okay, so these are the important entities. Okay. Let's go to the next topic, that is, I take this topic as growth and development. Okay, so growth, economic growth and development. Okay, so here there are developmental issues that have to be discussed. So the topics like poverty, okay, unemployment, inequalities, all this is part of this discussion of growth and development. Very important area, in the sense one question can come with respect to poverty, unemployment, inequality. So if you can spend some time, we can spend some time. These are the 3-4 chapters includes growth and development. Of course, we have discussed national income. National income is not this. National income is something like the formulas of GNP, GDP and all we have discussed. Okay, now when I refer to growth, basically growth is a single entity. Okay, so economic growth basically talks about a unidimensional factor, one single factor. Okay, you can see that circle there, one single factor. Okay, so one single factor will decide growth. So that is nothing but GDP. Okay, but when I use the word development, development is always multidimensional. Development is always multidimensional. So when we talk about investment, capital formation, okay, or when we talk about higher incomes, increase in GDP, okay, or capital markets, infrastructure development, all this is basically economic growth related values. But when I say development, okay, we talk about access to education and health, handling inclusiveness or focusing on inclusive growth, or improvement in quality of life, or talking about human development index, okay, or we have talking about multi-dimensional poverty index, etc. So these are all aspects which are related to development. But in developing countries like India, growth may not lead to development because failure of trickle-down theory in countries like India. Growth is there, but growth may not lead to development. Okay, so growth may lead to creation of jobs, incomes, it will increase tax revenues, but at the same time, development may not be ensured fully in the Indian context or the developing countries context. This is something which we should know. Okay, so when we talk about human development index or multidimensional poverty index, both these indices take the same 3 dimensions. I'll come to human development index or multidimensional poverty index, we will look into it later. But these both are based on the same indices, if you can observe there. So on the left hand side, you have human development index, and on the right hand side, we have multidimensional poverty index. So both these entities take health, education, and standard of living. Okay, so human development index also takes these 3 only, and you can see there in the multidimensional poverty index, you have health, again we have nutrition, okay, and child mortality. Education, again years of schooling and school attendance, okay, like this. So I'll come to these factors, but at least remember that the factors that they take for calculation of UHDI as well as multidimensional poverty index, both are same. Okay, so this is a chart which shows the sustainable development goals, okay, SDGs here. Of course, it is very difficult to remember all the SDGs, okay, but here you can see zero hunger, no poverty, good health and well-being, quality education, etc. Okay, you can just go through them. Okay, so we can't remember everything, but this is about the SDGs. You have 17 there, clearly visible. Okay, so all this is basically focusing on development. All this is basically focusing on development. Now, when we talk about inequality, okay, so there are different ways of measuring inequality. So according to UN, inequality is defined as a status of not being equal, status of not being equal. And we have basically economic inequality and social inequality. So when we talk about inequalities with respect to income, expenditure, or wealth, okay, we call it as the economic inequality. But if it is expressed as a difference among people when it comes to region, religion, gender, okay, caste, etc., then that is social inequality. But as far as our subject is concerned, we are more interested in talking about economic inequalities. So the different ways of measuring economic inequalities. One way of measuring economic inequality is the quintile ratios. Quintile ratio. So when I say quintile ratio, okay, so we are going to measure the top income or expenditure of the top 20% of the population to the bottom 20% of the population. So this in detail, I've taken some data. We'll do it in the class. We've done take some data, but very simple to remember. Okay, so quintile. So when I say quintile ratio, which is a measure of inequality, remember, what will they do? They take the income or expenditure of top 20% of the population and you measure it with income or expenditure of bottom 20% of the population is what we do. Okay, and higher is this quintile ratio, it means higher is the inequality. Okay, similarly, Gabriel Palma came up with this ratio called as Palma ratio. Okay, so what he does is he takes the income or expenditure of top 10% of the population and he'll compare it with the income or expenditure of bottom 40% of the population. Bottom 40% of the population. So it's not 10 and 10. Okay, if you take 10 and 10, it is decile ratio. Okay, so Palma ratio. Okay, so now and even Oxfam report talks about measurement of inequalities. And Lorentz curve, it is a graphical method of measuring inequality. Lorentz curve is a graphical method of measuring inequality. Okay, and Gini coefficient is the arithmetic measure of inequality based on the Lorentz curve only. Based on Lorentz curve, Gini coefficient measures. Okay, so when I have to talk about Gini coefficient, so of course, better than the slide would be our explanation only. So it's there in the slide also. Okay, so this is the Lorentz curve. Okay, so here we are okay, so the next measure of inequality is the Lorentz curve. Lorentz curve, okay, and Gini coefficient. Okay, these are used for measuring inequality. Okay, these are used for measuring inequality. Okay, now what we do. So Lorentz curve is nothing but a graphical method of depicting inequality. It's a graphical method of depicting inequality. But what is Gini coefficient? It's an arithmetic measure. Okay, it's an arithmetic measure of inequality based on Lorentz curve. Arithmetic measure of inequality based on Lorentz curve. Okay, so Lorentz curve, of course, I'll be a little fast here. We know this. Okay, so I'm taking a square. We've taken a square here. Okay, and here on x-axis we take the percentage of cumulative percentage of population. Cumulative percentage of population from poor to rich. How to plot also we have discussed, but here it's very simple. Okay, so 10%, 20, 30, 40 like this. And then here we are taking cumulative percentage of, on y-axis, cumulative percentage of expenditure or income. Okay, and there we take 10, 20, 30, 40, 50. Okay, so this line, okay, this is called as the line of perfect equality. This is the line of absolute equality or line of perfect equality. That means 10% of the population are holding 10% of the wealth, 50% of the population are holding 50% of the wealth. So then you get this straight line. Then as and when we move away from the line of equality, as and when we move away from the line of equality, okay, this is the Lorentz curve. Farther we are moving away from the line of So we are not taking the data and plotting, so because it's a rapid revision class. So here, as and when you're moving away from the line of equality, it means inequality is increasing. Inequality is increasing. So this is the area between the 45-degree line and the Lorentz curve. This is the Lorentz curve, actual Lorentz curve. Okay, so how do I get the Gini coefficient? Now, Gini coefficient is nothing but area between 45-degree line and Lorentz curve divided by area below the 45-degree line. Area below 45-degree line. It can be area below or above, whatever it is, the whole one. Okay, so this is what. So when that gap, when the numerator becomes 0, it means it is perfect equality. That means if the Lorentz curve coincides with the line of absolute equality, Lorentz curve coincides with the line of absolute equality. Okay, this is the Lorentz curve. So when Lorentz curve coincides with the line of absolute equality, that means numerator is becoming 0. So Gini coefficient is 0, is perfect equality. But when the Lorentz curve coincides with this line, the 90-degree line, okay, then it is line of perfect inequality. You arrive at this when 10% of the population is holding 0% of the wealth, 20, 30% also 0, 99% of the population is holding 0%, but last 1% of the population, the richest 1%, that the richest one is holding 100% of the wealth. That means this Lorentz curve coincides with this line. Okay, so that means Gini coefficient becomes 1. So what you have to remember? Gini coefficient is 0, perfect equality, and Gini coefficient is equal to 1, highest inequality. Gini coefficient is equal to 1, highest inequality. That is what we have to remember. Okay. See here, when we talk about Kuznets curve you also read in environment also. So here Kuznets curve is talking about per capita incomes and inequality. That means as and when per capita incomes are increasing, you observe that inequality is also increasing. Okay, so up to this point. So up to this point, if we observe, as and when inequalities per capita income is increasing, inequality is also increasing up to this point, and after that inequalities are decreasing. So this is what Kuznets curve talks about. What does Phillips curve talk? Phillips curve talks about an inverse relationship between unemployment and inflation. Inverse relationship between unemployment and inflation. That is called as Phillips. Kuznets curve relationship between inequality and per capita income. Okay. Laffer curve talks about a relationship between tax rates and tax revenue. tax rate and tax revenue. Lorentz curve talks about, it's a measure of inequality. Lorentz curve is a measure of inequality. Okay. J curve is related to BOP related aspect. J curve talks about something related to BOP. So J curve, as and when rupee value depreciates, first the current account deficit increases, and then only there will be slowly current account surplus. This is what J curve says. Of course, in the external sector revision, I will show you the J curve. So like this, you have to remember all. Okay. So then for measuring inequality, wealth-related inequalities are always higher than income-related inequalities. That is something we all should know. And then there is one more aspect which is called as the commitment to reduce inequality index. Commitment to reduce inequality index. Commitment to reduce inequality index. So this is an index basically. Okay. And this is also given by Oxfam International. Oxfam International. Oxfam International. Okay, so it measures the commitment or inclination of government towards reducing inequality. Okay, commitment or inclination. So poverty, priority mainly is given, how much priority government is giving in terms of reducing inequality. This is the logic. So this index basically takes three pillars into consideration. One is called as the public services pillar. Public services pillar. Two, it takes the progressive taxes or taxing. And three, it takes workers' rights. So it takes three pillars. India's rank recently 123 out of 161 countries. So what is the commitment of the government in terms of reducing inequality? That is what is taken into consideration. Okay, given by Oxfam International. It bases its report based on three pillars: public services, access to public services, progressive taxes, workers. When I say public services, means example, health, education, all this will be taken into consideration. Okay, and then another important concept is the concept of relative poverty. So in India, we don't talk about relative poverty. We are more interested in measuring absolute poverty. So relative poverty is a measure used for measuring inequality. Okay. So it is expressed in terms of differences in income or expenditure in the various sections of the society. So that means it measures what? Inequality. As per UNDP, it is a percentage of population earning less than 50% of median income. Earning less than 50% of median income, not mean income. Earning less than 50. Median is the positional average income. Okay, per capita income is the mean income. So in the childhood we have studied mean, median, mode. Okay, so now, okay, so that should be clear. Okay, here this is about relative poverty. Now, when we use that word poverty, so poverty talks about deprivation of basic requirements for leading a dignified life. Deprivation of basic requirements for leading a dignified life. Okay, so there are many reasons for poverty in countries like India. Okay, so one important aspect which we should know is overpopulation in countries like India. Or there are historical factors, lack of proper education and health, lack of skills, and then structural problems, okay, in the economy. Or we have issues of stagflation, okay, inflation associated with challenges of unemployment problem, okay, and then issues of jobless growth, okay, failure of trickle-down theory of the government. All these are all reasons for poverty in countries like India. And also Matthew effect. So Matthew effect is the benefits, the schemes implemented by the government for the poor are taken over by the middle class sections with some amount of education or assets, etc. So the biggest challenge with respect to handling poverty would be something like it is multidimensional in nature. So from the beginning, all the committees related to poverty were mainly focusing on the food calorie method. But poverty is way beyond food calorie. So sixth five-year plan has standardized the food calorie method. So earlier committees like OJA panel, Karan Ratna committee, Mount Singh Haulawalia committee, etc. All these committees were more inclined towards measuring poverty using the food calorie method. Okay, so the first poverty estimation in India was done by Dadabhai Nauroji. Okay, after Dadabhai Nauroji, the most systematic assessment of poverty was done by Dandekar and Rath committee. Okay, so I'll talk about the committees. Anyhow, then came up Alag committee, etc. And then we have come up with Suresh Tendulkar, Lakdewala, Suresh Tendulkar, and like this. So before I get into the discussion and make you remember the committees related to poverty, so what is important is, one is we know absolute poverty. So absolute poverty, how is absolute poverty calculated? You take a basket of goods and services. Okay, and you put those required for dignified life into a box. You get the monetary value of this box from the market. And all those, which is called as the poverty line basket, PLB, poverty line basket. All of them who are falling below this line, okay, so who are not able to spend or earn income above this line, then you will call them as BPL families or below poverty line. This is the most common method used for measuring poverty. Okay. Today, when we talk about BPL families, they are mainly identified by the state governments only. Okay. So till here, I think it should be clear. So let's move forward. So poverty, where questions can come. So one area is the committees, basically, where the question can come. Second is the basic definitions of poverty. Okay, so what is absolute poverty, etc. Then there can be questions on different methods used for measuring poverty, like the uniform recall period, mixed recall period, modified mixed recall period, etc. Okay, then the basic concepts in poverty, like the poverty gap, squared poverty gap index. Okay, so these are some areas where questions can come in UPSC. Okay, so now first thing is absolute poverty, we all have understood. Okay, but absolute poverty only measures something like absolute poverty will only measure something like the head count ratio. So what is head count ratio? The percentage of people who are poor divided by the total population into 100. That is what is the head count ratio. So head count ratio will only talk about the magnitude of poverty. The number of people who are poor can only be understood through the concept of head count ratio. So using the concept of head count ratio, we can only identify the number of people who are poor. That's all. Okay. So we cannot understand how poor they are using the concept of head count ratio. So to understand how poor they are, there is this concept called as poverty gap ratio. So head count ratio, since head count ratio will only determine the percentage of population who are poor, so it is only going to measure the magnitude of poverty. Okay, so if I want to measure the intensity of poverty means I also want to find out how poor somebody is. So that you can do it only through a concept called as the poverty gap ratio. So poverty gap ratio, PGR we call it as. So poverty gap ratio is nothing but poverty line in monetary terms. How do you get this poverty line in monetary terms? Okay, you take a basket of necessities. Okay, put goods, services which are required for dignified life. Get the monetary value of this basket from the market. Okay, I get the monetary value of this basket from the market, and And that is how you define the poverty line. Okay, so now poverty line in monetary terms minus average monthly consumption expenditure, average monthly consumption per capita of BPL households. So I'm taking the average of monthly per capita expenditure of BPL households divided by the poverty line multiplied into 100 by poverty line into 100. This is so simple as that. Suppose 100 rupees is the poverty line and average monthly consumption per capita of all those who are below the BPL is 50 rupees. So my poverty gap is 100 minus 50 divided by 100 into divided by poverty line into 100. So it becomes 100 minus 50 by 100. Okay, so into 100. So it is 50. So I think it is clear, everybody. So poverty line is 100 and average monthly consumption expenditure is 50. Okay, divided by poverty line. Okay, so this is basically 1 by 2 or 50%. Okay, so that is the poverty gap. So farther away you are from the poverty line, the intensity of poverty is more. Farther away you are from the poverty line, the intensity of poverty is going to be on a higher. Okay. Now, there is also one more concept called as the squared poverty gap index. Okay, so of course we'll not derive it here in the rapid revision class, but squared poverty gap index, that means there is a squaring of the values that is done. So this is called as the squared poverty gap index. Okay, so this is basically if head count ratio is same and also the poverty gap ratio is same. There can be a situation like this. For example, there are two countries, A and B. Okay, so let's say 8 people are above the poverty line and 2 are below the poverty line. Okay, so head count ratio is 2 by 10, 20%. Okay, same here, country B, 8 people are above the poverty line, 2 are below the poverty line. But here, this is how they are away from the poverty line. But when we take the poverty gap is same in both the cases. Let's say the poverty gap, when I take the poverty gap is same in both the cases. So when I take the average income of those below the poverty line, okay, the value is same. Let's say here also it is 50 rupees, here also it is 50. This is the poverty gap, the average. Okay, so, but now the question comes up, situation is worse in A or B, then situation is worse in A in comparison to B. So, but head count ratio and poverty gap ratio are same for A and B. And there we use something called as the squared poverty gap index. In this scenario, you find out when head count ratio and poverty gap ratio are same, we use squared poverty. So what happens here? We do poverty line minus the income of the first person. We are squaring it. Income of the first person who is below the poverty line. That means the first fellow. Okay. So squaring it divided by the poverty line plus poverty line minus again income of the second person. We are squaring it divided by the poverty line plus, like this we keep on squaring to the number, n number of times you square, divided by the n. N is number of poor. N is number of poor. Okay, so up to n, numerator goes up to n, divided by n is number of poor. Okay, so why are we squaring? Farther you are away, if you square, it will increase. So the 2 units away from the poverty line, if you square 2, you get 4. you're less away, 0.55 square, it will reduce 0.25. That means more weightage is given to those who are away from the poverty line, no more weightage. So automatically intensifying the poverty in case of A than B. So for which we use this concept called as squared poverty gap index. Okay, so that is then to methods to estimate poverty. When we are to understand the methods of estimating poverty. Methods of estimating poverty. Okay, so methods of estimating poverty. One is we have the uniform recall period, and then we have the mixed recall period, and 3 we have the modified mixed recall period. There are 3 methods. Okay, so uniform recall, mixed recall, modified mixed recall period. So 3 methods for measuring poverty. Okay, so uniform recall period, per capita consumption data is collected for a 30-day recall period. For all the items, food as well as non-food items, we are calculating it for a 30-day recall period. So you're collecting the data for all food and non-food items, per capita consumption expenditure, you're checking for a 30-day period. Okay, mixed recall period, 5 non-food items, clothing, footwear, durable goods, education, and institutional medical expenses, we calculate it for 365 days, and rest of the items we calculate it for a 30-day recall period. That is called as the mixed recall period. Suresh Tendulkar committee's one of the important recommendation is to shift from uniform recall period to mixed recall period. That is one of the important recommendations. Rangarajan committee, Rangarajan panel 2013 has used modified mixed recall period. It's an updation of mixed recall period. So modified mixed recall period, it takes those 5 non-food items will be calculated for 365 days. Okay, and certain necessities will be calculated for 7-day recall period, and others will be calculated for 30-day recall period. Okay, so here 7-day recall period, you can see it on the slides also, edible oil, fish, meat, vegetables. Okay, so these are pan, tobacco, these things, very frequent purchases, 7-day recall period. 30-day recall period for the remaining items like fuel, miscellaneous goods. Okay, so this is something we have to remember. Modified mixed, you have 365-day, 30-day, as well as 7 days. Okay, so that is one aspect. Then if we have to revise the committees also, okay, so revising committees, most importantly, okay, so firstly, there was first systematic assessment of poverty was done by Dandekar and Rath committee. Okay, and here we will see few important committees like Alag, Lakdewala, Tendulkar, okay, Rangarajan, etc. Okay, so if you closely observe, okay, so Alag committee was mainly constituted by planning commission, okay, and it is based on calorie base only. 2000, so before Alag committee, that is Dandekar and Rath was there, 1973. And earlier committees, they were not doing separate estimation for urban and rural. They were saying 2250, Dandekar and Rath also 2250 calories for both urban and rural. But Alag committee came up with a bifurcation for urban separately and rural separately. So urban, it is basically 2100 calories per day, and rural it is 2400 calories per day. This is one important. Okay, so As here, alag committee's observations also, if we see at the bottom, health and education was not given adequate importance because it was estimated that health and education will be handled by the respective government, state governments itself. Okay. Then Lakdewala committee in 1993. So most important aspect of Lakdewala committee. So it was also appointed by Planning Commission expert groups. Calories were taken into consideration in addition with clothing, education, shelter. Okay, so this committee also followed per capita consumption expenditure method only. Okay, and most important aspect in Lakdewala which you have to remember is state-specific poverty lines at the bottom. So state-specific poverty lines were updated, okay, separately for states. So you take the separate CPI industrial workers for urban areas. So CPI industrial workers only, new base year is 2016, as I mentioned yesterday. For that CPI industrial workers, the base year has been changed to 2016. Okay, so CPI industrial workers in urban areas and CPI agriculture labor would be the criteria for updation. Okay, and then the most important committee is the Suresh Tendulkar committee. You just keep observing the slides. So first of all, Suresh Tendulkar committee identified some challenges in the earlier committees. So what challenges he has observed? First is more importance is given to food calorie. So he says slowly move away from the food calorie method. If the most standard method even today is the Suresh Tendulkar method. Okay. Second, he says there is a crude price adjustment with respect to the poverty line basket. Crude price adjustment means you are not properly defining the poverty by linking it to inflation effectively. That is what is called as crude price adjustment. Okay. And then Suresh Tendulkar committee makes some suggestions. So what are the suggestions made by Suresh Tendulkar committee? First of all, Suresh Tendulkar committee says shift from uniform recall period to mixed recall period method of calculation. Second is give adequate importance to health and education in the poverty line basket. Adequate importance. Okay. Then third important aspect of Suresh Tendulkar committee. Okay, Suresh Tendulkar committee says slowly move away from the food calorie method. Slowly move away from the food calorie method because food calorie alone cannot define poverty. Okay, so that is what another important aspect which you'll remember is the last part there. He has taken the urban poverty line basket and the same poverty line basket was used for the rural areas also. That means he has taken a uniform poverty line basket for urban and rural areas, all India poverty line basket, which is there. So, but it is urban poverty line basket. Basket is not different for urban and rural now. So, in the Suresh Tendulkar committee has taken the same poverty line basket, that is urban poverty line basket for the rural areas. Okay, so this is what Suresh Tendulkar committee was recommending. Okay, then of course, Saxena committee, this committee was appointed in 2009 with respect to ministry by the rural development. Like this, many committees are there. Another committee is called as Hashim committee is also there. Okay, so Hashim committee was mainly talking about urban poverty or slums basically. Okay, so Saxena committee was mainly talking about measuring rural poverty. Saxena committee was mainly talking about measuring rural poverty. Hashim committee was measuring urban poverty. Okay. So there is some problem in the screen mirroring, but don't stop revision now. Rangarajan panel. Then Rangarajan panel basically, remember, 2013 it submitted its report. So how is Rangarajan panel different from Suresh Tendulkar committee? So two things we have to remember. Rangarajan panel not only took calories for the measurement, but also it has also taken fat and protein for the first time. Fat and protein. So calculation of poverty using Rangarajan was higher. That means the poverty line went up. So number of poor increased based on the criteria of Rangarajan panel. Another one is Rangarajan panel has used modified mixed recall period. Modified 365, 7 and 30. Okay. And another important aspect is again Rangarajan panel took a separate poverty line basket for urban and rural like the earlier committees. Like the earlier committees, he has taken a separate poverty line basket for urban as well as rural areas. So this is the basic difference between Rangarajan and Suresh Tendulkar. Okay, now as I've explained, you can observe. Okay, you can observe there. So Government of India, okay, appointed Rangarajan panel. So calories was the criteria. It included nutrition, fat, and other essential non-food items. Okay, so you can see protein and fat also clearly being visible. Okay, so now that is one important aspect. Earlier this was not there. Okay, and then if we observe Suresh Tendulkar Committee 2011-12 data, the poverty headcount ratio is 21.9%, 11-12. But Rangarajan panel, it is around 7.5, 7% more. In fact, using when you're calculating poverty using Rangarajan panel, 29.5. Okay, so poverty estimated was 7% higher than the Tendulkar committee estimation. Okay, so two things you also remember: SHIKSHAA committee related to measuring rural poverty, SHIKSHAA committee. Hashing committee, HAS, HIM, not important because old committees. Hashing committee is related to measuring urban poverty, especially slum related aspect, urban poverty basically. Okay, so that's it. So this is about some committees which we have to remember. And multidimensional poverty index. So according to World Bank, basically when we are measuring poverty, so World Bank talks about measurement of poverty. It defines somebody who's getting less than $1.9 a day is called as extremely poor. Now this $1.9, when I say this dollar conversion should be PPP exchange rate, purchasing power parity exchange rate. Yesterday we used it, no, PPP, with PPP exchange rate, what is the rank of India with respect to its GDP? Yes, what is the rank of India? Third, yeah. So that was previous UPSC also asked this question. One statement they asked the factual question, okay. And in another statement they may ask regular exchange rate, nominal exchange rate, it is something like the 5th rank. Okay, so it should be clear, no confusion there. Okay, now when I have to talk about the dimensions, this is the human multi-dimensional poverty index here, which is a concept developed by UNDP and Oxford Poverty and Human Development Initiative. Oxford Poverty and Human Development Initiative. They have developed it. That is one statement, a factual statement that you have to remember. Okay, so this has replaced the concept of human poverty index, and it has the same 3 criteria, 3 dimensions which the human development index takes. So I've showed that also in the slide earlier. So whatever the criteria which human development index takes, the same 3 dimensions: education, health, and standard of living. So you take 3 dimensions and you have 10 indicators. That is what they do in this calculation. 3 dimensions: education, health, standard of living, and 10 dimensions. So each entity is given 1/3 weightage. No, education is given 1/3 weightage. Okay, education will be given 1/3. Health is given 1/3. Standard of living will be given 1/3. That means the first criteria, years of schooling should be given 1/6, years of attendance 1/6, child mortality 1/6, nutrition 1/6. And here electricity should be given 1/18, 1/18, because so that's how the categorization is done. Okay, so 3 dimensions you have, and 10 indicators there. Okay, and multidimensional poverty index, percentage of people who are multidimensionally poor multiplied by the average intensity of multidimensional poverty across the poor. Okay, so here if the value, like if they are deprived of at least 1/3 of the indicators, measured there, shown there, then they are called as multidimensionally poor. Okay. Now, the next topic for discussion is this topic called unemployment. Okay, so unemployment, what kind of questions? Generally in prelims, So in prelims, there can be only questions on 2-3 areas. So one question can be what are the different ways of measuring unemployment. For example, we have usual status, we have current weekly status, we have current daily status. Next, there can be a question on periodic labor force survey, which was released by CSO or now NSO in 2017, the new method, periodic labor force survey. Then if at all they want to ask a prelims question, probably there can be a question on types of unemployment. Okay, that is disguised unemployment, frictional unemployment. Okay, or there can be some database questions. Unemployment rate increase continuously, decrease continuously, or there is no trend, etc. So these kind of questions can be asked. So unemployment trend can't be there because before COVID it was 6.1 and then it increased. Now the data shows it has decreased. So therefore you can't find a specific trend with respect to unemployment. Then some formulas which you should know, that is about the labor force participation rate. What is this labor force? What is labor force participation rate? What is workforce participation rate? What is unemployment rate, etc. So some terms we should be knowing. Okay, so unemployment is basically described as voluntary idleness. Voluntary idleness. Okay, so the proportion of people who are willing to work but they are not working divided by the labor force into 100. That is nothing but the unemployment rate. When I say unemployment rate, a person who is capable of working actively, searching for work but unable to find work. Okay, so that is what is unemployment. And this proportion to the total labor force multiplied by 100 is nothing but the unemployment rate. Or I can write the formula of unemployment rate as, so if I want to write the formula of unemployment rate, it can be written as labor force minus workforce divided by labor force into 100. This is what is the unemployment rate. Okay, and then workforce is obviously those population between that age group who are already working. Okay. Then worker population ratio is nothing but the proportion of employed to the total population. So when I say worker population, workforce divided by total population into 100, then labor force participation is nothing but labor force divided by total population. Labor force divided by total population into 100. Okay, so that is what is labor force participation rate, basic understanding. Then what is labor force? Persons who are either working, that is employed, between that age 15 to 64, who are already working, that is workforce, or who are seeking work, or who are seeking work. Okay, so these are called as labor force. Okay, so this is the basic understanding of the basic concepts. Okay, and then unemployment rate, the number of unemployed people divided, that is something which you know. Employment elasticity, one statistics which you'll remember, from 1970s to 1980, 80 to 1990 to 2004-5, and from 2004-5 to 11. Every 10 years, if I'm making a comparison, employment elasticity is decreasing. So percentage change in employment induced by changes in GDP. Percentage change in employment divided by delta percentage change in employment divided by percentage change in GDP. So India's case, this employment elasticity was decreasing from 70s. This indicates jobless growth. That means there is growth, but proportionately jobs were not getting created. There is growth, but jobs were not getting created in line with the growth. Okay, so that is what is employment elasticity. So then employment intensity, extent to which growth creates employment. Okay, so then the different types of unemployment, and okay, so some terminologies also, of course, these are definitions, like for example, when I use the word casual labor or a regular salaried employee. So casual labor, so he is part of the hired labor, but they work as daily wage laborers, etc., or daily or monthly basis. And and they are not on the permanent roles of the company. They're not on the permanent roles of the company. They are called as casual labor. But National Commission for Enterprises in Unorganized Sector, NCEUS, comes up with a definition for informal workers. Okay, so informal workers and unorganized sector. So now when I use the word unorganized sector, so those private institutions or they basically unincorporated private enterprises owned by individuals or households with less than 10 workers, you call them as unorganized sector. And workers who are working in these unorganized sectors are nothing but the informal workers. And they do not have complete social security. They do not have complete social security. So that is the basic difference of a casual labor. So UPSC was asking which of the following are unorganized sectors. A teacher working in a school, a police officer. So like this they gave, teacher in a school is also organized, it's not unorganized. So like this, or daily wage laborer, or somebody working in the farm. So like this they will ask, and then you have to identify. If we know what it is, then identification is going to be very simple and easy. The terms can be identified very easily. Okay, so then of course this they will not ask causes of unemployment. In mains it is useful, but in prelims what are the causes? Multiple causes. We discussed that in what are the reasons for unemployment. Okay, so labor force has increased in the recent past. Okay, transition of economy leading to disguised unemployment, increasing the pressure on land, jobless growth, over tertiarization of Indian economy, lack of skills, industrialization 4, artificial intelligence and robotics now. Okay, so all these issues of underemployment. Underemployment is something like working, you are working below your qualification. Your payment is way below your qualification. Payment is way below qualification, working below qualification. So all this is also underemployment. Part-time employees like the pizza boys looking for full-time jobs, all these are seen as underemployed. Okay, so the biggest challenge is of course unemployment problem by 2035-40, and also another biggest challenge is underemployment in the present scenario. Okay, so and when we talk about the different types of unemployment, okay, so one is the cyclical unemployment. Cyclical unemployment is something which is common even in the developed countries. Okay, so cyclical unemployment is also called as the demand deficient unemployment. So that is visible there. Okay, that column, I've not covered that column. You can see now demand deficient. So something like the economy is not doing well because of COVID, market is dropping. So demand deficient unemployment is because of the failure with respect to the cycles of the economy. So that is basically called as cyclical unemployment. Then we have the frictional unemployment. Now, frictional unemployment is also called as the surge unemployment. Frictional is also called as surge unemployment. That means the gap between jobs, you're hopping from one job to another. Okay, you're hopping from one job to another. Okay, then the time period gap you are there in between. That is nothing but the frictional. Okay, and then we have the disguised unemployment. So disguised is basically you can link up disguised unemployment with something like disguised unemployment to the agriculture. More people than required who are working in the farm, okay, or the marginal productivity of labor is almost zero. That is what is disguised unemployment. Okay, and then we have seasonal unemployment and can also be linked to Indian agriculture. Indian agriculture. Then comes the structural unemployment. So when I use the word structural, so structural unemployment basically, structural unemployment is something like there is a mismatch between the skill sets required for the jobs and the skill sets which the public have, people have, or the labor force has. This mismatch is leading to unemployment problem, which then it is called as structural unemployment. The two types of unemployment which can never be removed from any economy. Two types of unemployment which can never be removed from any economy is frictional and structural. These can never be removed, though the economy is working at its full potential. These two unemployments can never be removed from any economy. Okay. Now, there are different methods used for measuring unemployment. One is usual status. Of course, in current affairs, the usual principal status is also there. Okay, so usual status, usual principal status is different again. So usual status, usual principal status, current weekly, current daily. Out of all these three, just observe, I'll just explain. So when I say usual status, this usual status is basically used for measuring chronic unemployment. No? Chronic why? 365-day reference. You take 365 days reference period. So 365 days prior to the date of survey. Today I'm taking the survey, you're taking the data or collecting the data of 365 days prior to the date of survey. So if he's not employed for a very long period in this 365 days, you're calling him as unemployed. So this will measure, usual status will measure chronic unemployment. Now comes current weekly status. Now current weekly status is, I take 1 week reference period. In that 1 week reference, if he is not employed for a period of, so in this 1 week, if he is employed for a period of 1 hour or more on 1 or more days, if he is employed for 1 hour or more on 1 or more days, 1 hour or more on 1 or more days, okay, you are calling him as employed. So that means in that 1 week, on 1 day, if he is employed for 1 hour, also he is employed. That is what is current weekly status. Okay, so temporary unemployment or intermittent unemployment can be checked using current weekly status. Periodic labor force survey, which came up in 2017, mainly uses usual status and current weekly status. So one important understanding here. Earlier, the survey that was there was the EUS survey, Employment Unemployment Survey, which Employment Unemployment Survey, or you call it as the EUS survey, which measures unemployment once every 5 years. 1 second. So EUS survey measures unemployment once every 5 years. Now this EUS survey has been replaced by Periodic Labor Force Survey, 2017. So periodic means in the urban areas, okay, so every quarter the data is going to be collected using CWS technique, current weekly status. Urban and rural areas, both put together, every year, EUS is every 5 years, So periodic labor force survey uses usual status and current weekly status, both urban and rural put together. On an yearly basis, it's going to calculate. And it also uses the CAPI technology, computer assisted technology of the World Bank software technology for collecting the data. Okay, and current daily status. What is this? This is also called as a time rate basically. So this CDS technique is one of the best rate because it will also measure partial unemployment. So what happens in CDS? Here also we will take 1 week reference, 7 days reference period. So today the date of survey, so I'm taking 1 week reference prior to the date of survey. But here what we will do, on each day we are going to check. So if he is employed for at least 1 hour but less than 4 hours, you will take it as he is employed for half a day. Okay, so half a day. If he is employed for 4 and above, number of hours, 4 and above, then you take it as employed for the full day. Okay, so that means this CDS, every day you are going to check. So CDS will measure not only full employment or it also the full unemployment related aspect, but also partial unemployment will also be checked using the current daily status method. Okay, so that is the basic difference. Okay, and periodic labor force survey uses usual status and current weekly status. Usual status. So here you can see CDS is more composite measure because it measures both partial as well as full unemployment. No, that is the reason, composite measure of unemployment. Okay, so yes. So this is Phillips curve. Phillips curve. Okay, so It measures a relationship between unemployment and inflation. Okay, it talks about an inverse relationship between inflation and unemployment. Inverse. No confusion in exam. Inverse relationship between inflation and unemployment. It is easy and important, both. This is a previous year question. What is the answer? Yes. Yes. One. Yes. Very good. Shabash. That's all. All the rest of the two are useless. One only. Previous year. Use logic. Yes, others also. Try. Yes. See, poverty line basket, not A, answer is B. See, poverty line basket, I'll take urban poverty line basket, same basket I will measure in all the urban areas. I will take rural poverty line basket in all the rural areas. But state to state differentiation will be there because inflation. Price levels vary from state to state. That is the answer. Okay, now next. Yes, students, you're there. Answer. Previous year question answer. Person below poverty line classified as such based on work and all is nonsense. They are entitled to a minimum prescribed food basket. Wages we did not talk anywhere. Work and all we did not talk. Agriculture, labor, household, scheduled caste, tribe, social group, no. So answer should be A. Yes. Yes. Answer. Yes, marginal productivity of labor is 0. Yes, very good. That's all. That's how we have to revise unemployment. That's it, poverty, unemployment, growth and development. Okay. So the next topic Next revision area, external sector and foreign trade. External sector and foreign trade. So here, what are the areas where questions can come? One area where question can come is BOP, balance of payment. So BOP area question can come. Then another area where question can come is with respect to exchange rate, appreciation, depreciation of currency, what will happen. Okay, this you all know, we have discussed in the basics class also. Okay, so in the basics class we have talked about appreciation, depreciation. Okay, or there can be some terms. For example, I'll ask you one term. What is Dutch disease? Anybody? What is Dutch disease? So put it in the chat if you know. Put it in the chat. Students, put it in the chat if you know what is Dutch disease. What is Dutch disease? So Dutch disease is something like over appreciation of currency, making exports non-competitive. Over appreciation of currency. It's a term from NCRT. Over appreciation of currency, making exports non-competitive in the market. Okay. Or over appreciation making one sector competitive but other sector will the other sector gets dismantled. So either ways, that is what is Dutch disease. Netherlands found a lot of oil suddenly and Netherlands started exporting and huge inflow of dollars. So the local currency of Netherlands over appreciated. So its exports became non-competitive. Exports started becoming costly. Oil only was doing well, but all other sectors are not doing well. Okay, so that is what is called as Dutch disease. Okay, when we talk about foreign exchange market, it is a market. Market is a place where buyers and sellers meet. So in the foreign exchange market, buyers and sellers meet to buy currencies. So it's based on demand and supply. But earlier in the Bretton Woods system, okay, so it was the currency values were not decided. Bretton Woods system currency values were not decided based on Bretton Woods system currency values were not decided based on market situation. So they were decided based on a system which is called as the fixed exchange rate system. So when I use the word fixed exchange rate means these are basically you use a standard method like you take gold. Okay, so one is the fixed exchange rate. Okay, and then the floating exchange rate. Okay, so fixed exchange rate, either it was gold standard. That means you are linking the currencies directly to gold, or you are linking the currency to another strong currency like dollars. Here, the currency value is not decided based on demand and supply. Okay, so 1970s, this model of gold standard, that is linking currencies to gold, has been pushed off. One simple example, suppose $1 is equal to 10 dinar, and $1 is equal to 70 rupees. Okay, so that means each currency is linked to a strong currency called dollar in this case. So 70 rupees will be equal to 1 dinar, 10 dinar. That means 1 dinar is equal to 7 rupees. How did I calculate? Basically, all the countries' currencies, they are pegging it to a strong currency called dinar. So like that also you can decide the value. These are fixed exchange rate. In the fixed exchange rate, we find words like devaluation, because here everything is decided by the government or the central bank. Devaluation. So this word we have also used in the basics class. Or we use the word called revaluation. Revaluation. But in the market rate system, market means market is forces of demand and supply will decide the value. We use the words like depreciation, and appreciation of currency. Appreciation is increase in value of currency because of market. Depreciation is fall in value of currency because of market. Revaluation, increase in value of currency because of the central bank or the government's decision. Devaluation is reduction in value of currency because of government or the central bank's decision. So when we talk about floating exchange rate also, India follows a managed float model, or we call it as dirty float. India follows a managed float model or dirty float. Okay. So B1 batch, you need not worry, terms should be simple only. Anyhow, on 16th, we have again a detailed class on external sector. But you need not worry. So whatever we discuss here, you will understand only from our basics class. And for prelims, basically only concepts only. Basic concepts we will touch. Okay, so when I use the word dirty float is something like what RBI does. RBI is going to give a range. Let's say the RBI has given a range, $1 is equal to 70 to 75 rupees. As long as dollar and rupee is within this range of 70 to 75, okay, so RBI will not interfere. They will leave the currency determination to the market. Market means the forces of demand and supply. You will not interfere. You will not interfere. But if it goes, the value depreciates below 75, or if it appreciates above 70, then RBI will interfere and come up with sterilization activities. RBI will sell dollars, buy dollars, whatever is required to keep the exchange rate between 70 to 75. That means though it is a floating exchange, it is called as managed float because under certain circumstances, RBI will interfere. And that is the reason we use this word called managed float or dirty float. That is what we have to understand. As simple as that. I hope it is clear, everybody. Okay. And then, when we talk about exchange rates also, exchange rate, so that is fixed, floating. In that floating, completely you're not leaving to the market. Okay, then it is dirty float. So, devaluation or depreciation of currency, devaluation or I have written, but both are little different, you know the difference, will make our exports cheaper, and make imports costly. India devalued its currency for the first time in 1966. India devalued its currency for the first time in 1966. Okay, then again after 1991 BOP crisis also we have devalued our currency. Okay, so now devaluation will also increase remittances, etc. So the question, many times questions are asked, what should be done to handle excess depreciation of Indian rupee, etc. So these are very simple questions that were asked earlier. Okay, we will see in the previous question. Okay, so now another important aspect here, another important word to be learnt is currency war. So currency war is nothing but competitive devaluation of currencies to make exports cheaper. Competitive. One country has devalued its currency, therefore the other country devalues its currency, subsequently another country devalues its currency. So this is basically called as competitive devaluation of currencies to make their exports cheaper. So that is what is currency war. Currency war. Not good. Okay, not good. okay, because every country is trying to devalue their currency. Okay. Then we have used a word called Dutch disease. Over appreciation of currency, making exports non-competitive. Over appreciation of currency, making exports non-competitive. So that is what is called as Dutch disease. Dutch disease. Okay. Then another important term which we should know is BOP, balance of payment. So BOP is nothing but an accounting statement of residence, accounting statement maintained by Government of India. So in this accounting statement, it is a record, accounting statement is a record of economic transactions of residents of India with rest of the world. So these economic transactions, so what is BOP? It is an accounting statement. It is an accounting statement that records economic transactions of India or economic transactions of residents of India with rest of the world. So this economic transaction will include the visible item, that is trade with respect to goods. This economic transaction will include unilateral transfers. So when I say unilateral transfer, it includes remittances, gifts, grants. There is nothing in return. It includes income, NFIA, net factor income. Income includes rent, wages, dividends, interest. All this is income. Okay, and then it includes the capital aspect as well. Okay, it includes the services, etc. So unilateral transfer, services and income, that is 2, and this visible item, that is trade, 1. So this 1 plus 2, we call it as the current account. 1 plus 2 is nothing but the current account, and then we have the capital account. So going by the bifurcation for the BOP, so balance of payment, so we can subdivide it into current account and 2 into capital account. Current account is that which does not have any future implications. It is settled then and there. Capital account has some future implications also. Capital account also has some future implications. Okay, so future implication means loan is there, interest has to be paid at a later date. So in this current account, we have the visible part, that is the trade. Then we have the unilateral transfers, the remittances, and then services, then income. Okay, and this current account deficit is mainly because of the trade deficit. Okay, and the capital account, we have investments and then borrowings. Okay, so banking capital as well. Banking capital also I'll put it in the borrowings only, but banking separately, if there is banking capital, remember that is also part of capital account only. Okay, so in this investment, I have the foreign direct investment, also have the foreign portfolio investment. So portfolio investment. Now the new definition of FDI and FII. If this in this FPI itself, I have FII. Okay, so FII is there, or qualified foreign investment. This FII can also include the depository receipts like ADRs and GDRs, American depository receipt, global depository receipts, etc. All these can also be seen as investment. Okay, so the new definition of FDI and FII. Suppose in a particular company, if the FII investment is going to be more than equal to 10%, if there is an X company, in that X company, if FII investor is investing up to 10% and above, then that investment will be treated as FDI. So any FII investment moving into a single entity up to and above 10%, up to and above 10%, we call it, or we henceforth it will be called as FDI. And once you term an investment, FI investment as FDI, henceforth it will be treated as FDI only. Next year, though the percentage value reduces from 10 to 9 or 8 also, still it will be called as FDI only. That is what we should, the new definition. Okay. Now, UPSC was asked the question, which of the following is FDI last year? So, which of the following? So, FI with certain conditions. Yes, that is true. FI with certain conditions is FDI. So, FI with what condition is FDI? If this FI investment crosses or it is greater than equal to 10% in a company, it is FDI. And this is for a listed company. Any investment into an unlisted company, listed is something listed in the stock market. Any investment into an unlisted company will be treated as FDI only. FDI only. Okay. So that is about the FDI FI new definition. Now, another important aspect is when I use the word bonds, etc. So these are all part of borrowing. So in the borrowings, remember, ECB, external commercial borrowing. Out of all the external debt, remember, out of all the external debt, maximum amount of external debt is in the form of ECB. ECB followed by NRI deposits. ECB followed by NRI deposits. Banking capital, in the banking capital we put NRI deposits also. So in the banking capital we put NRI deposits also. Okay. So when I say that all the external debt is not in dollars, there was a UPSC question. All our external debt is in 55% of our external debt is in dollars. You have it in euros, pounds, SDRs, etc. So out of the total external debt, major amount of external debt is in the form of ECB, external commercial borrowing, then followed by NRI deposits. Okay, that is something we shall remember. Then we have one more component here called external assistance, which is called as the soft loan. Soft loan, which the government is taking loans, etc. So from IMF, World Bank, etc. All that is soft loan. I hope it is clear. Soft loan. Okay, so when I say NRI deposits are also something like the borrowings only. So in this NRI deposits, we have one is the FCNR, foreign currency non-resident Indian account, where the NRI will put money in the Indian bank account, and that too, that account will be maintained only in dollars, and that too term deposits. He will deposit it. There are no demand deposits in the FCNR, only term deposits, means he'll deposit that money for a fixed period of time, maybe up to 1 year or 5 years minimum maturity. Okay, so that is basically FCNR, foreign currency non-resident. Then we have non-resident external account, non-resident external, and we also have non-resident ordinary. So non-resident external account means here the NRI can open both demand deposit or term deposits. It has demand as well as term. FCNR is only term deposit. Here he can open both. These accounts are maintained mainly in Indian rupees. You know, NRE account is maintained in Indian rupees. Okay, and here it can be both demand as well as term. NRO account is also basically any person outside India can open NRO. Generally, whatever money is earning from the businesses or rent he is getting from within India, that money, if it wants to be credited, he will use NRO accounts, NRO, non-resident ordinary account. So this is also a rupee account, a non-resident rupee ordinary account. So what is the purpose? For him, the main challenge is if he is running some business, he has given his property on rent. So from his transactions and income he is generating within India, so it wants to be credited into some account. So you use this account called as NRO account. So like this, bifurcation. Okay, so UPSC used to ask which of the following is current, which of the following is capital. And UPSC was asked foreign currency convertible bonds. So this was also, bond means it should be treated as debt instrument. That means generally it should be part of ECB. FCCBs are part of ECB only. But in India, what is the meaning of foreign currency convertible bond? So the word itself is convertible. That means these bonds can be converted into equity. These bonds can be converted into equity. That is the reason you call it as foreign currency convertible bond. See, NRO, any person residing outside India can open NRO account. Somebody is asking, any person residing outside India can open, okay, NRO account, irrespective of he being an Indian also. But that is not the criteria when it comes to FCNR and NRE. NRO account, anybody outside India can open this account in India. And this account is maintained in rupees in the Indian banks. FCNR account is maintained in dollars. Okay, NRO account is maintained in rupees. Okay, and this account can also be maintained in the form of demand or term. Okay, this can be maintained in the form of demand as well as term deposit. That means you can maintain it. He can put the money for a fixed period of time, or he can remove it any point of time. Okay. And why is this account opened by somebody outside India, including NRIs and all, is mainly to deposit the income he generates from India. Mainly to deposit incomes which is generating from India. Whatever income is getting from India, maybe rent and all. He has, NRIs generally they buy some flats or whatever it is. So they have given them on rent. They are getting some income out of it, rent out of it. That gets deposited generally in these NRO accounts. NRO. Okay. So, and generally income generated on NRO account is taxable also. Income generated on NRO account is also taxable. This is what is NRO. Somebody asked me to repeat. So, NRO, non-resident ordinary. So, UPSC asked foreign currency convertible bond. These are bonds issued by corporates in India for corporates in India for somebody outside. Okay, so some NRIs, etc., they can buy these bonds. So it is as good as they are giving us dollars to the corporates, or corporate is borrowing from them. So therefore, it should be part of ECB. But UPSC question was, which of the following can be treated as part of FDI? And even FCCB was part of the answer. That is the reason, going by the knowledge, all questions cannot be answered. Remember, with knowledge, we can't clear prelims. Knowledge 70%. Practice and knowledge is 80-85%. In fact, more practice we do, more questions we solve, pulse of UPSC is understood, we clear the exam. 2 is basically playing with the options. Very important. Playing with the options. The answer will be there in front of us and you have to identify. So like odd men out, there will be some odd men out questions also. There will be some extreme words. Somebody the other day was saying, sir, elimination is completely removed after 2018. That is wrong. Earlier, maybe we could eliminate 20 questions. Now you can eliminate 6-7 questions. Elimination will never be removed. There will be scope for elimination. There will be scope for playing with the options. That is the beauty of UPSC question paper, where no mock paper can be like UPSC question paper. Never. It can never be. So this is something which you can grasp by solving more questions, then automatically you will clear. And you should know where to stop reading, and that means you don't read too much. Not required. For prelims at least, it's not required. Okay, now, so these are banking capital also is part of capital account, banking capital, NRE. So here, I bifurcated the NRI accounts into FCNR, NRE, NRO. Okay, FCNR is only dollars, it will be maintained. And it is only term deposits. Okay. Now, then UPSC question was foreign currency convertible bond. Generally, bond means it should be part of borrowing. But that portion of this convertible bonds, which are converted into equity, this is treated as investment. That portion of this convertible bond which is converted into equity, this that portion will be treated as investment or FDI. Okay, so that should be clear. So you know this, current and capital we know. Okay, so all this table is useless once the concept is clear. This is only for faster revision. If you want, you can go through. Okay, so otherwise the same thing only. So Indian rupee even today is partially convertible. So in the basics class also we talked about it. When I say full convertibility, no restrictions. So current convertible, what is convertibility? UPSC previous question, converting one currency into another. That is what is convertibility, freely. Okay, current account means no restrictions whatsoever when we are converting currencies for the purpose of those aspects which are part of the current account. Capital account, freedom to convert domestic into foreign, which implies 100 investments, acquisition of assets, all that. If there are no restrictions, and so their Tarapur Committee 1 and Tarapur Committee 2 were appointed with respect to capital account convertibility. But the recommendations of Tarapur Committee was also very clear that we are not completely ready enough for complete convertibility. So even today, Indian rupee is only partially convertible, partially. It is fully convertible with respect to current, and it is partially convertible with respect to capital account. Okay, so this is a graph which talks about J curve. So this is J curve. So tomorrow any factual question comes up. Okay, so this is one, I've mentioned this, like Phillips curve, Kuznets curve and all that. This is what is called as the J curve. So what is this J curve? It clearly says if devaluation, currency is devalued. So in this case, currency is devalued at this level. At this level, currency is devalued. The deficit further increases. Deficit increases. Okay, so current account deficit further increases first. That means it is more impact is on imports first, and then only deficit reduces, or there is surplus. So the impact is first on the impact is first on imports. This shows that the deficit further increases, imports becoming costly, and then only. So this is what is called as J curve. J curve. Now, this is important in prelims. So they may ask, what is this J curve? What is this J curve? It should be clear. Okay, no confusion. Devaluation, depreciation, and all is clear. Hot money is something which is volatile, like the FII, which can easily move out of the country, flight of capital, etc. That is what is hot money. Okay, and Dutch disease is clear. Okay. Currency war, competitive devaluation of currencies making exports cheaper. Okay, so import cover. Now this was asked previously. It is a number of months of imports that could be paid for by a country's international reserves. My forex reserve becomes important. Okay, so why? So how BOP operates, if we see, then you will understand this. I'll give you break at 4:30. Okay, so we'll take solid breaks and then so that will not be stressed also, and then at the same time we cover everything. So in this BOP, suppose in this current account, there is minus $1,000. And in capital account, there is plus $1,000. So this 1,000 will be used for bridging the current account deficit. And the current account is made zero. The value is made zero. Okay. Now for suppose, if this is minus 1,000, but capital account we have plus 2,000. Plus $2,000. I've written plus 2,000 here. Okay. So that means in this, from here, 1,000 will be pushed. Then there is remaining $1,000. That remaining $1,000 will become part of the forex. Remaining 1,000 will become part of the forex reserve, RBI. Okay. But for suppose this is minus 10,000 and capital account we have only plus $8,000. So this 8,000 is used, but still there is remaining. Now that means RBI has to use its forex and push 1,000, push $2,000 from its forex. But as far as BOP account is concerned, it is getting added into the account. Okay, you use the forex reserve. Okay, so this is how the BOP account basically operates. When the capital account is not sufficient, then RBI uses its forex reserve. But what if there is no forex also? There's no forex. This is what happened in 1991. Forex is also not there. Then we landed up in BOP crisis. Because forex reserve is not there, we have landed up in BOP crisis. Okay, so this should be clear. This should be clear. Okay, so this is how it operates. One question, try answering this question. That's all, and then we can take a break. Answer this question. Previous question only, nothing like a difficult question. Oh. Yes, portfolio investment has to be removed. Answer should be 1, 2, and 3. Very good. So it's okay. This question you will solve it in here. So I think it is clear. I hope you are following. Yes, if you are following and it's all fine, put it in the chat. So poverty, unemployment, that is developmental areas, and external sector is done. Yes, are you there? See, don't worry about slides. This, of course, rapid revision slides also I will forward, but focus on the revision part and keep your, just open up your mind and just keep revising along with me, so that by today night, one shot of economy revision is over. That's all. And whatever economy is there, slightly 1 or 2, yes, we can do, but economy is over. And if because of the classes, 75% of the questions, if you are able to solve these 2 days, that means my job is done. And I am confident that it will be done. No issues. Okay, except for a very technical question if it comes up. Okay, otherwise it's all okay. See, one more area which is there here. is about this concept of nominal exchange rate and real exchange rate. Okay, so real exchange rate, nominal exchange rate, and PPP exchange rate. You just remember the formula only. So when I'm talking about PPP exchange rate, what is nominal exchange rate is something like the normal exchange rate based on demand and supply. $1 is 70 rupees, etc. That is all nominal exchange rate. Okay, so PPP exchange rate is something like you're taking a basket of goods. Okay, so and you're measuring it in India and you're comparing it with other countries like US. So let's say a basket of goods is 30 rupees in India, and the same basket of goods is $1 in US. So that means PPP exchange rate is $1 is equal to 30. It is different from the nominal exchange rate. Now, trade competitiveness of a country, trade competitiveness is measured using real exchange rate. Trade competitiveness is measured using real exchange rate. So real exchange rate is equal to nominal exchange rate divided by PPP exchange rate. Okay, and trade competitiveness of country is measured using this concept called as real exchange rate. Trade competitiveness of a country is measured using the concept called as real exchange rate. And real exchange rate is equal to NER divided by PPP exchange rate, purchasing power parity exchange rate. Okay, so that one you remember. And B1 batch, anyhow, this area I will again discuss in detail with you on 16th. I will discuss this. No, we will not expand it here because it's a time waste. Here this is a revision class, so we have to be on that. Okay, so focusing on only those things which will definitely come in exam. Okay, so real exchange rate is equal to nominal exchange rate divided by PPP exchange rate. This should be clear. Okay, yes. Okay, so take a break, nicely relax and come. We will start with, I will revise planning. Investment models, of course, it's mainly mains, but I'll tell you where question can come if at all. Planning and investment models together we will revise, and we will revise the money market and capital market. So these three areas we will revise in the next slot. And then we will be left with agriculture, food processing and industry revision. Okay, that's it. Okay, so take a break, 15 minutes break and come back. We'll meet after 15 minutes. Okay, yes. Okay, so students, let's start revising economic planning. The next topic. See, PPP exchange rate, somebody was asking PPP exchange rate, something like we take a basket of goods and compare this basket of goods in one country and the same basket of goods at what price can you buy in US. Okay, so here basically in PPP, purchasing power parity exchange rate, we are comparing what the proportion of the amount of goods which $1 can buy in US, the same proportion of goods we are trying to check in other countries. That is what is called as the PPP exchange rate of dollar with other currency. So in India's case, it is rupees. No? So in India, that basket of goods you are getting for 30 rupees, the same basket you are getting it for $1 in US. It means PPP exchange rate is $1 is equal to 30. Okay. Now, economic planning. See, this is one, probably there can be one question here. Probably there can be one question in this area. So if you have to revise economic planning, first thing is types of planning we'll revise. So one is we have this something called as the imperative planning. So imperative planning is basically followed in the socialist economy, which is also called as the command economy, which mainly follows top-down approach. Top-down is something like you take decisions at the top, you push it to the bottom. Okay, so here basically a central authority decides all the aspects related to planning and it is pushed to the bottom. Okay, and here entire resources are used to the maximum fulfilling the targets of the plan. So India initially after independence, we followed something like imperative only. Okay, and then subsequently from the 8th 5-year plan is from 1992, we shifted to indicative planning. So indicative planning is soft planning, or you have decentralized planning. So it is something like an opposite of imperative. Okay, so it is more of flexible in nature. And in indicative planning, you encourage private sector's participation. So everything is not under the control of government. We also encourage private sector's participation. Okay, so though private sector is regulated, private sector participation is encouraged in indicative planning. Then if we say rolling plan, India followed rolling plan basically in 1978. What happens in rolling plans? So every year, 3 new plans are prepared and acted upon. Every year, 3 new plans are prepared and acted upon. Okay, so one is the current plan, that is the annual budget. Next, you will prepare something like the medium term, that is 3 to 5 years. And then we'll prepare a perspective plan for 10, 15 and 20 years. So in rolling plans basically, which we came up 1978, again it was removed in 1980 because change in government. Okay, so rolling plan, there will be 3 new plans are prepared and acted upon. Every year 3 new plans are prepared. So what are the 3 new plans? Basically one will be the annual budget, 1-year plan, then the midterm 3 to 5 years, and then the perspective plan for 10, 15 and 20 years. Okay, and that is what is basically called as the rolling plan. And then perspective planning, which Niti Aayog is following. So here basically you are talking about a long-term planning. In perspective plan, long-term planning basically usually 15 to 20 years. Okay, you will have different plans, but long-term perspective will be there. So this, you will have a vision basically for a long term, and then it will be operationalized through 5-year plans and annual plans. Okay, so here the direction is fixed in the next 15-20 years. So this is a model which Niti Aayog is currently using. So now we don't have planning commission. So today it is Niti Aayog. So currently Niti Aayog uses perspective planning only. Okay, so this is all about the different types. Now the way we remember this 5-year plan is, first of all we have to remember something like first 3 years. The best way to remember, we have 3 plans, 1, 2 and 3. Okay. Okay, so here just observe first 3 plans, and then we have 3 plan holidays. 3 plans and 3 plan holidays. Okay, so this should be clear, then it will be easy. 3 plans and then 3 plan holidays, and then we have 4th and the 5th plan. We have the 4th and the 5th plan, and then we have 2 rolling plans. Okay, 2 rolling plans. That means here 3 plans, these are 3 plan holiday. Okay, and then we have 4th and the 5th plan. Then we have 2 rolling plans. Okay, then we have 6th and the 7th plans. Again we have 2 plan holidays. And then we have 8, 9, 10, 11, 12. Okay, so 3, 2, 2. 3, 2, 2. That's how you'll remember. 3 plans, 3 plan holiday, 2 plans, and then we have 2 rolling plans, and then 2 plans and 2 annual plans again, change in government. Okay, and then 8th, 9th, 10th, 11th and 12th. Okay, so this is how you will remember. Okay, first 5-year plan was based on Harrod-Dormer model. Okay, and first 5-year plan, we have achieved the growth targets also, targeted growth. Okay, so we have achieved it. There was focus on agriculture primarily, and along with agriculture, rural development, price stability, etc. So some events to remember, estate duty was introduced in 1953, very difficult to remember that. So at least you remember the period, no, 1951 to 56. Okay, then second plan, 1956 to 61, Nehru Mahalanobis model, where there was a shift from agriculture to heavy industry and basic industries basically. Okay, so we believe that growth, if you can achieve through industrialization, and that growth will percolate down to the lower sections, etc., that will bring in inclusiveness through trickle down effect. This was the belief basically. Okay, so and we have emphasized on import substitution. However, after 1960, our import substitution industrialization model became very popular. So which is also called as ISI, import substitution industrialization. Okay, so there is a basic shift. And this is a period where Industrial Policy Resolution 1956 was adopted. So this IPR policy 1956 is very important because it was the main policy which promoted license Raj. License Raj. For every new industry to be started to produce more also, you need something like the licenses. Now, third 5-year plan, the most dangerous basically, in the sense that this was a period which we were not good at all, 1961 to 66. Least amount of economic growth, around 2.8%. Okay, so 1961 to 1966, situation was not good. It was filled with drought. Okay, and therefore there is a focus on industrialization and also food grain production, both. Okay, FCI had to be set up in 1965 during this period of time. Okay, so there were a lot of unforeseen situations during this plan. Chinese war, Chinese aggression, Pakistan war, etc. And this created hell a lot of problem during 1961 to 66. And therefore, when there is a crisis kind of situation, you cannot come up with long-term plan. And that is the reason after these 3 plans, we have 3-plan holiday. We wanted to recover. You can't think long-term now. 1966 to 1969. 3 annual plans. 66 to 69 annual plans. So during this plan only, FCI came up, IDBI Bank, okay, Agriculture Prices Commission 1965, along with Food Corporation of India. Okay, during the 3 annual plans, many things were done. Okay, so worsened financial situation, etc. And during 1966 to 69 only, first Green Revolution. During these plan holidays, first Green Revolution was also launched. Okay. And Indian currency was also devalued for the first time during this period of time. That should be clear. Okay. Then fourth and the fifth plan. Then we have 2 rolling plans there in between. 1978, Janata government came up with rolling plan. Okay. So fourth plan, 1969 to 1974. So MRTP was introduced, Monopolies Restrictive Trade Practices Act. This was the period when that MRTP was the entity which regulated competition earlier. So currently competition is regulated by CCI or Competition Commission of India. Okay. So banks nationalization, all this was also done during this period. Okay, that is 1969. 14 banks were nationalized. Okay. Then fifth plan. Okay, so main focus, Garibi Hatao. In the early 70s, Indira Madam came up with saying Garibi Hatao instead of Indira Hatao. So poverty elevation programs were also focused during this period. Okay, so poverty eradication, self-reliance, etc. Okay, so these were the main objectives of the fifth plan between 74 and 79. Now, during this period, so we understood that poverty cannot be eliminated through trickle down, and there should be a specific focus on poverty. And that is the reason fifth and the sixth 5-year plans specifically focused on poverty. Okay. Emergency situation declared in 1975, etc. during this period only. Okay. And 1978, a rolling plan was introduced. But again, it was abandoned by the Congress government. And we have discussed what is rolling plan. Okay. So, sixth plan, 1980 to 1995. Okay. So, this plan was mainly focusing on a shift from industrialization towards infrastructure. Previous UPSC question. Which 5-year plan focused on a shift from industrialization towards infrastructure? That is the 6th plan. Okay, so, and during this period, there was focus on employment and village and small industries development program. Even the bank NABARD was also set up during the 6th plan, 1982, along with Export-Import Bank. Okay, so 6th plan was focusing on welfare, etc. to some extent. Okay, so poverty and all were extended. Then the 7th plan, 1985 to 90. Okay, 6th and 7th, and then again 2 plan holidays, annual plans because of the change in government. So 7th plan, 1985 to 90. So there were, during this period, there was a rapid growth on food grain production increased, etc. Focus was there. And also the plan was also termed as the infrastructure plan. So which plan was termed as infrastructure plan? You should remember that 7th plan was termed as infrastructure plan. Okay, so education focus operation Blackboard, etc. launched in 1987. And there were some annual plans also, 1992. That is how 3 and then 2, that is rolling plan, and 6th and 7th. And then you have 2 annual plans, 1990 to 1992. 5-year plans could not be implemented due to political situations in the country. And then came up the 8th plan. Okay, so 8th plan, and 8th plan was implemented between 1992 to 1997 during the period of BOP crisis. So obviously indicative planning methodology started off in the 8th 5-year plan between 1992 to 1997. Okay, so during this period, indicative planning means soft planning. Okay, so major focus was obviously on rapid economic growth, okay, improvement in trade, improvement in current account deficits, etc. All this. So government also faced some difficulty also in terms of focusing on development and growth together during this period of time, because structural reforms were implemented, etc. Okay, so this plan has neglected social sector spending. It became difficult, obviously, and therefore this plan has neglected social sector spending. So then 9th plan basically mainly focused on another aspect like inclusive growth, because along with economic reforms, you have to also focus on governance and inclusive growth. So therefore, during this period, you have Antyodaya Anna Yojana, Sarva Shiksha Abhiyan, all this focusing on welfare basically and right to education, etc. All this during the 9th 5-year plan. Okay, so that means during the 9th 5-year plan, there was again adequate focus given to agriculture basically, agriculture and rural development. 9th 5-year plan. There's adequate focus given to agriculture and rural development. Okay, slowly privatization of public sector was started. In the 8th 5-year plan, there was only focus on disinvestment. In the 9th 5-year plan, there is also focus on privatization as well. Okay. Then the 10th 5-year plan, 2002 to 2007. So 10th plan focused on poverty, gender gaps, IMRs. That means it shows an aspect related to inclusiveness. Okay. So it was focusing on universal access to primary education, etc. So here, along with growth, literacy, savings, investment, forest and tree cover, all these were focused. We can't remember all this and they will not ask also. Okay, so few things only, main things you have to remember. Okay, 11th plan 2007 to 12. Okay, this plan basically, towards, the theme of the plan was towards faster and more inclusive growth. So the word inclusive growth has been coined, or basically the word inclusive growth has arrived, though the concept of inclusive growth was there from the beginning. So the word inclusive growth specifically arrived in the 11th 5-year plan. Okay, so that is a logic which you can see that yes, though there will be a focus on growth, targeted growth of 9% they wanted to achieve, but at the same time there was a lot of focus on inclusive growth, that is basically focusing on IMRs, malnutrition, MMRs, etc., or reducing anemia, etc. This is all, that means focus on health and education specifically, is clearly visible in this particular plan. And the most important aspect which you should remember is, okay, so the theme itself mentions that towards faster and more inclusive growth. Towards faster and more inclusive growth. Okay, and one important aspect is, for the first time ever, 30% of the total outlay was kept for social services sector. Okay, that is the reason inclusive growth. As far as inclusive growth logic is concerned, no, for the first time ever, in 30%, around 30% of the total outlay was kept for social services sector in this plan. And the theme itself talks about towards faster and more inclusive growth. Okay, so then 12th five-year plan, basically 12 to 2012 to 7, and then 12th plan was the last plan of the planning commission. Planning is there, but now it is basically handled 2015 onwards. It is Niti Aayog which has replaced the planning commission. Okay, so the 12th plan, five-year plan theme was faster, more inclusive and sustainable growth. That time they have asked fast, already it is asked faster, more inclusive and sustainable growth. Okay, so the 12th plan was the last plan of planning commission, and from 2015 onwards, Niti Aayog was set up mainly to replace the planning commission. So economic growth target was reached in 1, 5, 6, 7, 8 plans. 1, 5, 6, 7, 8. 5, 6, 7, 8 is okay. 1 you remember. 1, 5, 6, 7, 8. These are the plans where economic growth targeted growth. Actual growth is more than the targeted growth. Actual growth is more than the targeted growth in 1, 5, 6, 7, and 8. Okay, so these are the successful five-year plan which achieved that growth rate. Okay, so 1, 5, 6, 7, and 8. Okay, then 2015, Niti Aayog has replaced Planning Commission. Niti Aayog has replaced Planning Commission. So when we talk about basic differences between Niti Aayog and Planning Commission, okay, so Planning Commission basically enjoyed powers to allocate funds to ministries. There are no powers or financial powers to Niti Aayog. Niti Aayog is purely a think tank. Okay, it cannot give dictums to the state government, etc. Okay, so Niti Aayog basically works in consultation with the state governments. It cannot impose anything on states. Planning Commission had some powers to impose something on states, and Planning Commission had some financial powers, etc. Planning Commission followed top-down approach, centralized, because it came up during the centralized mechanism. Niti Aayog follows something like the bottom-up approach. Niti Aayog follows bottom-up approach. In Planning Commission, you had only full-time members. In Niti Aayog, you have both full-time as well as part-time members. Niti Aayog focuses on decentralization. Decentralization. So you have also, in Niti Aayog basically, we also have the participation of governing. That means you have something like the governing councils, etc. In these governing councils, you have the chief ministers of states, lieutenant governors of UTs also participating. Okay, so you have something like the decentralized approach when it comes to Niti Aayog, but in Planning Commission it was more of a centralized approach. So these are some basic differences between Planning Commission and Niti Aayog. So this can be asked, in the polity it can be asked, or whatever it is, you treat it as polity or economy. Ultimately it is something like, what are the basic differences between Planning Commission and Niti Aayog? Okay, so you also have the local area development centers. Okay, so that is basically you'll have participation from the local problems, or the ground level problems can be understood. Okay, and you are understanding the problems at the bottom and then you are implementing it. So this is basically called as a bottom-up approach. Niti Aayog follows bottom-up approach. Okay, so that is about Planning Commission and Niti Aayog. Then So the next topic is financial markets. Okay, so next topic is financial markets. Okay, so when we use the word financial market, okay, so there are two types of financial markets. One is the money market and another one is the capital market. So we should basically know the difference between money market and capital market. Okay, so money market, there is borrowing and lending only for a short-term period. So money market, borrowing and lending happens only for a short-term period. Short-term period means maximum maturity period will be up to 1 year. Okay. Capital market, long-term assets, maturities of greater than 1 year. Maturities of greater than 1 year. Okay. So what we should understand here. Okay, so if I have to understand the basic difference between money market and capital market. Okay, so money market instruments basically are short term. So here it is capital market, it is long term. Here we only have debt instruments. Here we have debt instruments plus equity in capital market. So when I say debt instruments, these are money market instruments are also called as discounted securities. Discounted securities. So these are issued at discounted rates and purchased at the original face value. Example of one money market instrument is T-bills, or we have certificate of deposits, or we have commercial papers, or trade bills, or commercial bills. Okay, cash management bills. All these are examples of money market instruments. Money market instruments. Okay, so the basic difference is in money market, it is loans are taken for a period in this market for a period of less than 1 year, short-term needs basically. Okay, government also uses, government's instrument in money market, obviously most famous is the treasury bill. So treasury bills, these are basically discounted securities. Discounted security means they do not offer specific interest. They are issued at discounted rate but purchased at original face value. So these are basically called as the money market instruments. Okay, then these discounted securities like treasury bills, etc., they are also called as zero coupon bonds, or non-coupon bonds. Non-coupon, there is no coupon announced. Okay, so but in the capital market, long term you have G-Secs. G-Secs are basically coupon bonds. Whenever G-Secs are issued, interest is announced, 5 rupees, 10, whatever, coupons are announced. So wherever coupons are announced, we call them as coupon bonds. And in the equity, we have, equity side, we have something like the primary market and the secondary market. So primary market, if we are buying shares directly from the company, we are buying shares directly from the company, it is primary market. Examples of primary market, initial public offer, follow-on public offer. So IPOs and FPOs are examples of primary market. So if you are using the share market to sell the shares to somebody else, then that is basically secondary market. You're using the share market to sell the shares to somebody else, it is basically called as the secondary market. Now another important understanding is the difference between public offer. IPO is public offer and private placement. When I use the word public offer means everybody can come and buy. Okay, so you can buy, I can buy. That is a retail. We are all retail investors. We can buy, and even companies can buy. But in a private placement, everybody will not be allowed to buy. In a private placement, it is not for everybody. It is only for a restricted few. So those restricted few generally who are allowed to buy are also called as the qualified institutional buyers. So the restricted few are also called as the QIBs, or the qualified institutional buyers. So who is a qualified institutional buyer? So qualified institutional buyer is somebody like the insurance companies or the pension fund companies, okay, who have earlier experience, even the banks who have earlier experience of the stock markets, and they are seen as pros. They have the experience in stock markets. By SEBI, they will recognize as pros, and they are only invited for the investment purpose. Then you call it as private placement. Public offer means everybody is allowed. So why should some company go ahead with private placement? So when the amount of money which they have to raise is not more, then why should they go ahead with IPOs, etc.? Okay, so that is when they go ahead with a public offer. Is that clear? Okay, so qualified institutional buyers are only allowed. Okay. So when we use the word derivative, derivative is nothing but something like an instrument which derives its value from an underlying asset. One important example of a derivative, offshore derivative instrument is the P note or the participatory note. Offshore derivative instrument is the P note or the participatory notes. So UPSC previously asked a question, who issues P notes? Who issues P notes? It is nothing but the FIIs. FIIs issues P note. So participatory note is nothing but an offshore derivative instrument. Offshore derivative instruments. So P notes and FIIs are obviously regulated by an institution called as SEBI. Stock markets are also regulated by an institution called as SEBI, Security Exchange Board of India. So capital markets are obviously regulated by SEBI. Okay, so that is something which we should know. Money markets basically RBI. Okay, capital markets basically SEBI. Okay, so here we have written the commodity markets, like that. Forex market is a place where currencies are traded. Okay, so Forex market is a place. Commodity markets, where commodities like rice, wheat, gold, silver, they can be traded in the market, in the commodity markets. Okay, so when the commodities are traded, there is also a tax, direct tax, like the commodity transaction tax, CTT we call it as. Okay, so this is something like, so unorganized method of money market is basically the hundis which are used earlier. Unorganized, which are hundis, these are unorganized. But basically organized mechanisms are basically, you have RBI, public sector banks, private sector banks involved. Okay, so here government and corporates, organized, unorganized cooperative sectors. So features of money market: short term, highly liquid. Maturity periods generally less than, maximum maturity period is less than 1 year. So one example we have talked about earlier is also T-bills. So remember that there is a difference between treasury bills and G-Secs. For example, treasury bills and G-Secs both are government debt instruments only. Okay, but G-Secs are issued by RBI on behalf of both central government and state government. But T-bills are generally issued by RBI on behalf of only central government. On behalf of only central government. Now I wanted to ask, sovereign green bonds. Who issues sovereign green bonds? Yesterday I have discussed this. Put it in the chat. Put it in the chat. Sovereign green bonds. Who was issuing, who was handling the sovereign green bonds? RBI, yes. Very good. So it is RBI, that's all. Okay, sovereign means government related. No, it's handled by RBI. Okay, fine. See, treasury bills basically are issued by RBI on behalf of central government only. Okay, and T-bills, there are 3 types of treasury bills today: 91-day treasury bill, 182-day treasury bill, and 364-day. We do not have the 14-day treasury bill. So if the government wants to borrow for a period of less than 91 day, then they are using something called as the cash management bills. So cash management bills are also money market instruments only. Okay, so if they want to borrow for a period, it's same as treasury bill, but if the government wants to borrow for a period of less than 91 days, then they are using something like the cash management bill. T-bills are called as discounted securities as they do not offer any specific interest. They are also non-coupon or zero coupon bonds. They are also non-coupon or zero coupon bonds. Non-coupon or zero coupon bonds. Okay, so there are many money market instruments. So one is basically call money, notice money. Call money, notice money, these are interbank borrowings without security. Interbank borrowing for a short-term period. If it is interbank borrowing for a period of 1 day, it is call money. For a period of 14 days, 2 to 14, notice money. So it is interbank borrowing for a short-term period. So call money, notice money, etc. Similarly, we have treasury bills. Okay, so less than equal to 1 year. Okay, so it's basically less than 1 year, 91, 182 and 364 days. Okay, cash management bills basically similar to treasury bill. That means RBI issues these cash management bills on behalf of central government only, like the T-bill. Okay, but the maturity period is less than 90. So for less than 90, now they are using these bills called cash management bills. That means these are also money market instruments. Okay, certificate of deposits. Okay, they are issued for by commercial banks basically, scheduled commercial banks. Maturity period up like 15 days to 1 year. Okay, so 15 days to 1 year. But its maximum maturity is 1 year only, not beyond 1 year. Okay, so that is something which we have to understand. Commercial paper issued by companies basically, corporate and financial institutions. So maturity period is 7 days to 1 year. All these are money market instruments only. All these are money market instruments only. No confusion. One second. So you have to remember T-bills, cash management bills, certificate of deposits, commercial paper, all are money market instruments. This is a detailed one. Of course, we have to can't like this we can't revise. Okay. So one recent change which was there is the minimum amount required for commercial paper, of course, commercial paper and certificate of deposit. So earlier minimum amount required for certificate of deposit is 1 lakh and above. Certificate of deposits are issued by scheduled commercial banks and financial institutions, okay, that have been permitted for raising short-term funds only. So maturity period is less than 1 year only. But it is issued by banks to meet their own short-term. That means who is issuing? Banks are issuing means banks want to borrow. Now minimum amount of certificate of deposit earlier was 1 lakh. Now minimum amount of certificate of deposit is 5 lakhs, like the commercial paper. So minimum amount and multiples of 5 lakhs. This is the new change in RBI's website. Okay, so certificate of deposit, minimum amount earlier, minimum amount of certificate of deposit that is required was 1 lakh and multiples of 1 lakh. Now it is 5 lakhs and multiples of 5 lakhs. That is what you have to remember. Okay, and then commercial paper. Commercial paper, this is again a short-term money market instrument. Short-term money market instrument. Okay, so companies, primary dealers, financial institutions, etc. So all these mainly companies issue. Now who are primary dealers? Now there can be a question. P notes are basically mainly foreign players, obviously. Yes, P notes are issued because it is FII, foreign institutional investment, issued by FII entity. Means not for Indian entities, obviously, but they are anonymous in nature. P notes, problem with participatory notes is anonymity. Okay, so complete details where that note is getting traded, who is holding it, is not there with SEBI. That is the risk of participatory note. Okay, somebody was asking that out. Okay, so commercial paper, money market instruments issued by companies. Primary dealers are those who trade with respect to G-SECs. Okay, here maturity is 7 days minimum. Okay, so maturity is 7 days and maximum up to 1 year. Maximum up to 1 year. Okay, very simple only. Okay, so maximum up to 1 year. So then commercial bill. So commercial bill, these are nothing but trade bills. These are nothing but trade bills. So what is a trade bill? It is a negotiable instrument drawn by the seller or buyer for the value of goods delivered. Okay, so but once these trade bills are accepted by the commercial bank, then you call it as the trade bill. So once this commercial bill is accepted by the commercial bank for discounting, okay, then we call it as the commercial bill. Okay, so I think it is clear till here. Okay, so now I think it is clear, everybody. Commercial, we have discussed this earlier, no? Commercial bill and trade bill, commercial paper. Okay, see. So all these are basically money market instruments. So they are issued at face value. They are issued at discounted rates and purchased at the original face value. That is what happens. Okay. Hope it is clear. Okay. Somebody is asking what is a see, you have the primary dealers. Okay, these primary dealers can be something like the merchant bankers. Okay, so investment bankers who help with respect to trading. So, but again, there are certain dealers who work with the primary dealers. There will be some dealers who again work with the primary dealers. Okay, and they cater to the requirements of the retail market. They help the retail market. So on the top you have the primary dealer. So below this primary dealer, you have this satellite dealer, and this satellite dealer will help with respect to the trading of G-SECs, etc. for the retail investor. Retail investor is somebody like us. So he is called as the satellite dealer. Satellite dealer is he works in consonance, or he works as a second layer for the primary dealer. Primary dealer is there, helps in trading of G-SECs. Then you have the satellite dealers, okay, who will act like an intermediary between the primary dealer and the retail investor with respect to the trading of G-SECs and all. He is called as the satellite dealer. Okay, so UPSC will not first of all ask primary dealer. I don't know, till now they have not asked what is a function of a primary dealer. Okay, but primary dealers basically their objective is trading with respect to government securities, etc. Okay, so when we talk about the capital markets, so we have two components there. So one is the primary market and another one is the secondary market. So primary market maturity period of 1 year, okay, or more, and dated securities we call it as. So in capital market also we have debt instruments, or we call that as dated securities. You know, dated securities are maturity periods of more than 1 year. Okay, but when it comes to equity part, you have primary and secondary market. Examples of primary market, one is we have IPO and then we have FPO. Both are public offerings only. Initial public offering, follow on public offer. Okay, so instruments of capital market, we have shares. Okay, when we talk about different types of shares, one is the equity shares. Equity shareholders are called as the real owners. And then we also have the preferential shareholders. So preferential shareholders are given a preference during the liquidation of the company. So always remember, whenever a company is liquidated, first the bond holders are taken care of, then the preferential shareholders, and then the equity shareholders. So that means the preferential shareholders are given a preference over the equity shareholders. Real shareholders are the equity shareholders because equity shareholders have the voting rights. Voting rights. Preferential shareholders, one more thing that happens for the preferential shareholders is there's a fixed amount of dividend, fixed percentage of dividend that is guaranteed to the preferential shareholders. Fixed percentage of dividend is guaranteed. Now then we have some bonds, unsecured loans, which are called as debentures. So most of the time debentures are called as unsecured, but to make these debentures more secured, these debentures are charged on the assets. What I mean by debentures being charged on the asset means when the company is dissolved, the assets have to be sold and the debenture holders or these bond holders have to be settled because these debentures are charged on the assets like the plant and machinery. Then we have convertible debentures or convertible bonds or non-convertible debentures. So convertible debentures are those which can be converted into equity. Non-convertible debentures cannot be converted into equity at a later date. Okay, so convertible debentures have less risk of inflation, because they can be converted into equity at a later date. So since they have less risk of inflation, convertible debentures have less risk of inflation, and since they have less risk of inflation, okay, so you need not offer higher coupon, higher interest also to motivate for convertible debentures. But non-convertible, you have to offer higher coupon because there is a risk of inflation. This was a previous question last year. Indirectly, this was the concept involved in that question. Okay. So then we have derivatives. Derivatives is something that derives its value from an underlying asset. So in the derivative market, we have something like the forwards, futures, and forward, future, and we have options. And we also have something like the swaps. And so this is a technical area. So forwards and futures, you are trying to do some agreement for the purchase or delivery of an asset at an agreed future date. Okay, so you're not doing it today. After 6 months, suppose 10 kgs of potatoes the farmer is selling to ITC. There is an agreement in the forward contract between the farmer and the ITC company. Okay, so 10 kgs of potato ITC is going to buy at 100 rupees a kg after 6 months at an agreed date in future. So what kind of contract it is? It is basically basically a forward contract. Forward. Okay, so forward contract between two parties to buy or sell an asset at a specific future time at an agreed price today. You are agreeing to sell 10 kgs of potato at maybe 100 rupees a kg or 50 rupees a kg, okay, at a later date after 6 months or 3 months. This is forwards. Futures also happens the same way, but the only difference between forward and future is forwards are not traded in the stock market. Forwards are not traded in the stock market. They are only over-the-counter derivatives. Forwards are over-the-counter derivatives. That means two parties will sit and there is basically a transaction happening between on phone, two parties. There is this selling and buying happening. Forwards are not traded in the stock market. Okay, but futures are basically traded in the stock market also. Okay, so when we talk about currency swaps, etc., so swaps are basically used to reduce some currency related risk in future. Okay, so suppose there is a currency swap agreement between India and Japan. It means we said you will buy products from Japan at a particular rate, like $1 is 50 today. So you are saying $1 is 50. Okay, so $1 may become 70, 80, whatever it is in future, but you are fixing the rate that today. So $1 at $1 is 50. We are going to procure so and so goods from a particular country or so for a particular entity in future. So this is basically swaps help us to handle currency risk related aspects. Okay, and then options. So in this forward contract, option is something like when I'm using an option. Okay, so I either execute the contract or I need not execute. I have the option not to execute the contract. I have the option not to execute the contract. Okay, have the option not to execute the contract. These are called as options basically. Okay, so you have call option, put option. These are the options which are there. Okay, you have the put option, like you have right to sell, but you are not obligated to sell. Okay, so that means you need not implement the contract. Okay, so because you have purchased this option. Okay, so that is the basic difference between options and futures. But I don't think they will get deeper into derivative instruments because stock market is, they'll not get into too much of detail there. Okay, then public issue means what? Open for all. Public, when I say public issue, it is open for all. Okay, private placement is you are raising money from certain selected group of investors like the qualified institutional buyers, not for everybody, not from everybody. So it is only for a restricted few. For example, rights issue is you're raising capital from existing shareholders of the company. Recently, Reliance has raised, not recent, 1 year, it's already over. So Reliance has raised some capital from existing shareholders of the company. So that, why? Because if suppose Reliance has to raise only some 300 crore or 400 crore, Reliance need not go ahead with a public issue. Why public issues? It's not too much of money. You can go ahead with something like a private placement, or rights issue means already existing shareholders are there. They will receive a mail. So since you are our existing shareholders, we are issuing shares for you at a discounted price, maybe at 400 rupees, whatever it is a share. Okay, so you please buy. Okay, and you can buy. So here, as a matter of right, it goes to the existing shareholder. So rights issue is only for existing shareholder. The word existing shareholder is important for prelims. So tomorrow you have to identify the option. So it is for the existing shareholders. Okay, so that is what is the rights issue. And then you also know the difference between primary market and secondary market. So there is no confusion. Okay. Now, what is the basic difference between a mutual fund and an exchange trade fund, ETF? Remember, both mutual fund and ETF, there is a portfolio. You have a group of companies which are part of it. Group, there is different sectors. Okay. But mutual funds cannot be traded in the stock exchanges. Mutual funds do not have a secondary market. You can't sell mutual fund to somebody else. You want money from your mutual fund, you have to go back to the company itself. Okay, but ETF basically, ETF can be listed and traded on a stock exchange on a daily basis. ETF, gold ETF or exchange trade. Bharat 22 was an exchange trade fund of 22 companies from 6 different sectors. Okay, so ETFs can be traded in the stock exchanges, but mutual funds cannot be traded, will not be traded in the stock exchanges. So that is a basic difference between mutual fund and ETF, which you should remember. Okay, so when I use the word hedge funds, or hedge funds are not for everybody. Hedge funds, you can't buy. It is only for high net worth individuals, etc., because they are highly risky. These are highly risky entities. Similarly, we have these words like venture capitalist, angel investors. So, venture capitalists or angel investors, their primary function is to fund risky startups. So, these venture capitalists, they provide funds. Okay. And generally, any startup is there, you have to depend on them. Okay. And they generally ask for equity or share in your company. Okay. Angel investors, basically, they give seed capital, initial capital. And these are generally affluent individuals who provide capital for a business startup. So these are basically angel investors. Venture capitalists are, companies are there. These companies, they raise money from different sources and they fund. Okay. So mutual funds are not alternate investment funds. Mutual funds, suppose they ask you what are alternate investment funds, they don't dig deep into it. There are 3 categorizations of alternate investment funds. So they've asked in the SEBI exam, they're not asking UPSC, the categorization of alternate investment funds. But this is something like alternate itself means it's not the regular source. You're raising money from different sources and funding. So mutual funds and all are not alternate investment funds. Okay. So Then collective investment schemes. These are regulated by SEBI. Collective investment schemes are regulated by SEBI. So it is collective investment scheme is not illegal. It is legal only. A company can pool money from different sources and then it invests. Okay, so collective investment schemes are not illegal. Ponzi scheme is illegal. Ponzi scheme is illegal. Okay, so Ponzi scheme means within a very short span of time you give huge amount of return. Okay, so you collect, so let's say there are two people and you collect money from another two. And when they want money, from the money which you have collected from the other two, you are giving it to the top two. And then these two at the bottom, they will collect money from another three. Okay, and these another three will again collect money from another three. Like this, it expands and goes. So this is how a Ponzi scheme basically works. Ponzi is illegal. US actually has gone against Ponzi. It was put in jail and all. Okay, so collective investment scheme per se is not illegal, but Ponzi means high returns you are offering in a very short span of time. In India, basically, whenever somebody says, money you can earn very fast. Okay, so Amway was one such company. So they target countries like India only, using the word financial freedom. So poor people, middle class, okay, so they get attracted because they are slogging their whole life for money. So whenever this Amway marketing companies come or agri-gold marketing companies, they talk about something like it is all network marketing and all that. All that doesn't work for many actually. It's a useless concept. Okay, so but they target countries like India. Why they target countries like India is because poor people or middle class get tempted for financial freedom. Okay, so if you attend their seminars also, it is hopeless and useless. They'll be showing Mercedes-Benz and all that stuff, and so all this is this is something like a network marketing linked. But collective investment scheme is not illegal. Okay, there was Sharda scam in West Bengal. Okay, so it was something like a chit fund. They said it's a chit fund scheme. Chit funds are regulated by respective state governments. SEBI doesn't regulate chit funds, chit fund companies. Chit fund is not regulated by SEBI. But collective investment schemes are regulated by SEBI. So SEBI wanted to interfere and ask, okay, so what is this? Then they were saying, no, it is respective state government will handle. It is something related to chit funds. But later it became a scam and all that issue. So this is something like issues with respect to regulation, etc. Okay. Adani raised fund from FPO. Okay, well, so FPO is not something like, see, what you should understand is, with respect to Adani and Hindenburg, I don't know how many of you have read. Okay, there is this aspect called as short selling. Hindenburg is an entity which resorts to short selling. Short selling. Okay. So what is they can ask in UPSC, because Adani and that Hindenburg, they were in news, they were fighting and all that stuff was there. So they may ask in prelims this word, what is short selling, they may ask. Okay. So we'll just try to understand what happens in short selling in simple words, so that if any statement comes up in exam, you can mark the answer, identify the statement. Of course, we can't have a detailed discussion on that. Okay, so simple way to understand short selling. Simple way to understand short selling is, suppose generally share market, what we do, we buy shares when the prices are low, okay, and we sell the shares when the prices are high. Okay, so this is a common method we use. Common method of stock market operation is basically we buy when the shares price is less, and we sell when the share price is more. This is the operation. Okay, this is what is called as the regular mechanism, what we do. So this you do it in the bullish market. Bullish. So you're expecting that the share prices will increase. This is called as the bullish market, when the share prices are increased. Okay, so then what to do when the economy is not doing well and it's a bearish market? No, bearish market. So the expectation is like the shares are sold. A bearish market is share prices are falling. Can I make money in the falling market is the question. Can I make money in a falling market? So there you can make money in a falling market. Short selling is one. Short selling is one. So what happens in short selling? First I sell. I am selling. I am selling when the price is high. Okay. And I buy it back. I buy it back on the same day. I buy it back on the same day when the price is less. I buy it back on the same day when the price is less. Okay, so, and this happens in the intraday. Intraday means it is settled on the same day. It has to be settled on the same day itself. Okay, so observe, short selling means you are selling it when the price is high, okay, and I am buying it back when the price reduces. Reverse of what we do regularly. You need to have another account, margin account you call it as. You should have that margin account for doing this. And generally, now when I'm selling, the question is, do I need to have or have this share in my hand to sell? No, I need not have the share in my hand to sell. So that is the tricky part. I'm selling something which I don't have. I'm selling something which I don't have. I can borrow. I can take it from the broker and sell. I'm not holding it. I need not hold it for selling it. This is the magic of short selling. So magic of short selling is I need not hold it or it need not be mine to sell. Okay. I can borrow it from some broker. I can sell and at a price, and then I'll be waiting for the price to fall because I'm expecting it's a bearish market, and then I will buy. Now it should happen in the intraday. Intraday, that means simple example. Suppose there is this X share, a share of a company. Now I'm selling it at 150 rupees. 10 units I've sold it. 10 units of this share, I sold it at 150. And I'm waiting that it will go to 140. And I want to buy 140 or whatever it is. I have to buy. On the same day, it should happen. So 10 units. So minus 10 units in my account. Okay. I sold it minus 10 in my account at 150. But now the trading time, let's say trading period is from 9:15 in the morning to 3:15. 9:15 to 3:15. Okay, now this is the period where the trading happens. Now this is a time period. No, this is the period of trading. So I will wait till 3:10, 3:5, 3:10. I'm waiting. So that it will fall. If it falls, if it doesn't fall also, it will be squared off at 3:15. In fact, 10 minutes before 3:15 only, many companies square it off. Companies like Zerodha and all, they will give you some 5 minutes extra. So 5 minutes, we did it. We tried the 3:15, 3:20 also, they give some more time. But it will be squared off at the day end. Squared off. That means if it doesn't become 140, it became 160 also. It will be squared off. If it becomes 160 means you lost. 140, you get a 10 rupees profit on each share. So 10 shares you sold means you got 100 rupees profit. That's all. Number of units in your account is 0 only. Earlier it was minus 10. Now it will become plus 10 when you buy. But number of units 0. You did not buy the share also. Your number of units is 0. So without buying something, I'm able to sell and I'm getting it back again. The number of units in my account is 0. this is what is short selling. This is what is short selling. Have you understood? I don't know. Have you understood short selling? Okay, so see, you are selling a share when the price is high. Selling means don't think you have it with you. You are just selling. I said 10 units you sold is minus 10 in your account. Then it comes back. You have to buy it back on the same day. If you're not buying also, it will be squared off. You have automatically you have to buy. By 315 it comes. So you are sold it at 150, 140 you're getting it. Means it is buying it at 140 means your profit is 10 rupees. Suppose Hindenburg is this entity only, which is into short selling. Suppose it releases wrong reports. Of course, no proof. Suppose Adani shares are there. You sold Adani shares and you release some wrong reports on Adani, defame Adani, let's say, and Adani shares fall and you want to buy. But of course, it's a short selling entity, Hindenburg, but it did not do all this. That's not the reason, but there were a lot of discussions on this. Okay, so you wantedly defame a company so that the company shares fall and then you buy. But of course, it's a professional organization. Probably it will not be doing all this stuff. So like this. So in this context, there is this word called short selling in use with respect to Adani. So they will not ask Adani, but they may ask this word short selling. They will not ask about Adani, but they will ask what is short selling. So that can be asked. I hope it is okay. Okay, so depository receipts, participatory notes, these are some terms for revision basically. So when I say participatory note, offshore derivative instruments, high degree of anonymity issued by FII. Then comes up this word called anchor investor. Okay, so who is an anchor investor? Suppose an IPO is issued, IPO, but there is no demand for IPO. So how do you bring demand for IPO? You are asking some institutional investors like the companies, insurance companies, etc., to invest into this IPO. So these institutional investors who subscribe to these IPOs, they are building some confidence on the IPO, confidence on this IPO. And then again later, since LIC has subscribed to these IPOs means this IPO should be a good IPO, and then you build confidence, and then the retail investors, people like us, we may also invest into this IPO. So so LIC is called as the anchor investor here. So these are institutional investors basically, institutional investors who are invited to subscribe for shares ahead of IPO. So why are you doing that? It's mainly to boost confidence, You are calling them to subscribe for shares ahead of IPO. Okay. Bear means investor who believes, bearish market. I said, no, bear is an investor who believes that the market will go down. So, okay, bull is the investor who believes that the market will go up. Bullish. So you are buying, you sell. So bullish market. So investors who believe that market will go up. Okay. So then Tobin tax. Okay, Tobin tax was there, not in India, of course. So buying and selling of currencies in a very short span. So this will create speculation effect. No, unnecessarily you're creating demand for currencies. Okay, so to prevent that, to prevent very short-term selling and buying of currencies, this is called a speculative currency transactions. So to prevent that, they have come up with levying this tax called as Tobin tax. So that is a context basically. So tomorrow, for suppose that word is asked. Okay, so I hope it is clear. This is easy only. I think you should be knowing this. Okay, debenture holders are of a company are. Please tell us once. Which one? What is that you want me to explain? Short selling? Is it short selling? Okay, okay. I'll explain. Solve this question. I'll explain. Debenture holders are creditors. Okay, simple question UPSC asked earlier. Okay. Next question. Sorry. Bear denotes. An investor who feels that the price of a particular security is going to fall. Okay, okay, fine, good. Short selling, I don't know whether they'll ask, but it was there, so okay, let's see. Slowly we will understand. Okay, see, it is a little different. Some countries have banned only, but SEBI allows this in our country. Some countries do not allow also short selling. India, our regulatory body allows. This is something like I can sell something without holding it. Fantastic. It's a fantastic thing because I can sell something without holding it. Okay, so listen, now regularly, how do I make profits in the share market? Regular. What is our way we do? Okay, so generally what I do, I check the shares and I would have invested something 1 year back, 2 year back. Also, I would have decided some shares today morning itself. And I want to make profit by today evening. Suppose I've decided I want some 5,000 or 10,000. Today there is a dinner party. So I want 10,000 profit. This is the logic now generally. So what we will do, we will try to buy some shares. Generally, what we do? Buy. And you have some knowledge, you are reading newspaper, you get some details like, oh, this is something, definitely this is going to increase in future. Okay, so then I will sell. So I'm buying. When will I buy? When I buy, when the price is low. Okay, I buy and then I will sell when the price is high. This is what we do. And that is how you make money. This is what we do. This is regularly what is the regular trend which we all follow. You need to have a demat account that is sufficient for this. A trading account and demat account is sufficient for this. Okay, but short selling is different. So in short selling, reverse? What is the reverse? I sell first. I sell when the price is high. And by the end of the day only, intraday, Why I am saying end of the day is, by the end of the day, if you are not buying also, it will come into your account. It is squared off by the broker, Zerodha, these companies are there which support you with respect to trading. No, they will square it off. Square it off means 315. The day end, it will be squared off. And it will come into your account. Okay, money will come into your account. Now so here I am selling and then I buy when the price is less. This I do it in a bearish market. Making money in a bearish market is also important. No? Last year, share markets were not doing well. This year also, share markets were dull. So how do you make money in a bearish market? Now, bearish market is basically they identify some shares. Okay, they sell it at a higher price. This is what short selling companies also do. We can also do short selling. So they sell at a higher price, buy it when the price is less. Okay, so trading period, time, 9:15 to let's say 3:15. Trading starts at 9:15, trading ends at 3:15. Okay, so I am going to sell at 9:15. Sell at 9:15 or 9:20, whatever. I am selling 10 units of a share, 10 units of a share at each share 100 rupees. This is minus 10. Why minus 10? Because it is not in my account. I am selling something which is not in my account. I have borrowed it from the broker, etc. So minus 10 units will be there in my account. I have sold it for 100. That is why minus 10. Why? Because it is not mine still. I am selling it though it is not mine. I did not buy it earlier. I have borrowed it from the broker and as a minus 10. I am selling it at 100. I placed the order. Okay. Now, what is my logic? By the day end, I am waiting 2 o'clock, 1 o'clock, I am waiting that this will become 90, 95, 80, 97. I want to buy. Maximum I can wait till 3:15. 3:10 only. 5 minutes before only they may square it off. So 3:10, at 3:10, whatever is the price, it will enter into my account. I have to buy. Okay, through 3:10, if it is 90, I have made profit. I made 10 rupees profit. Okay, units will not come. My only profit will 90. Suppose 90 rupees at 3:10, I have purchased it. Means on each entity I have got 10 rupees. So 10 rupees on each entity, 10 shares. So I have got 10 into 10, 100 rupees my profit. But if it is becoming 110, I will make loss. But units, there is no change. Units is 0. Minus 10 day morning, now plus 10 entered in day 3:15. So units 0. Units in my account is 0. No change. Okay. So this is what is short selling. I don't know. Have you followed? Have you understood? Okay. How bonds or equities are interchangeable, not interchangeable. When I say convertible, last year there was a question, what are the factors that will affect bond yield? They've asked already. When I say convertible bond, means this bond can be converted into share tomorrow. Company converts it into share. Company converts it into share tomorrow. So each bond is, let's say, 20 rupees. 3 bonds, 1 share. So 60 rupees, they have converted this bond into share. Now you became a shareholder. Convertible bond. Non-convertible bond, that bond which cannot be converted. It remains as a bond only. You are a bond holder receiving interest. You become a shareholder, you receive dividend. Okay, so you're becoming part of the company, equity. So bond, convertible bond means that bond which can be converted into share. That is what it is. Okay. So masala bonds was asked earlier. Okay. So what are masala bonds? These are rupee denominated bonds issued in other countries. Rupee denominated bonds issued in other countries. Okay, that means somebody wants to buy these bonds, they have to pay rupees and buy. That is what is rupee denominated bonds issued in other countries. These are all previous questions only. Rupee denominated bonds issued in other countries. IFC, which is a wing of World Bank Group. World Bank Group has 5 institutions. You would have read in your international affairs class or the international institutions class. World Bank has 5 institutions. You have IBRD, IDA, you have IBRD's International Bank for Reconstruction and Development, then you have IDA, International Development Agency, then you have MIGA, Multilateral Investment Guarantee Agency, and then you have IFC, this IFC, which is there in the question, and then you have ICSID, International Center for Settlement of Investment Disputes. Okay, so when I use the word World Bank Group, okay, so in the rapid revision there you revise. When I say World Bank Group means only 2 institutions. World Bank means you have IBRD and IDA. This is what is World Bank. Then they refer to World Bank means you have 2, International Bank for Reconstruction and Development and IDA. IDA gives soft loans, long-term grants, soft loans IDA will give. IBRD purely commercial basically. So then you have, when I say World Bank Group, it has these 2 plus it has MIGA, Multilateral Investment Guarantee Agency. It also has IFC, which is the first entity to issue masala bonds. IFC, it has issued masala bonds outside. In rupees, it raised money for India's infrastructure development, etc. So IFC is the first entity which has issued masala bonds outside India. So IFC, and then we have ICSID, International Center for Settlement of Investment Disputes. Like this, when I say World Bank Group means 5 institutions will be there. Okay, India is not a member of last one. India is a member of 4 institutions. India is a member of 4 institutions in the World Bank. IBRD, IDA, MIGA, World Bank Group. No, when I say India is a member of 4 institutions in the World Bank Group, India is not a member. India is not a member of ICSID, International Center for Settlement of Investment Disputes. India is not a member of this entity. Okay, so IFC was the first entity to issue. Okay, so like this there. Okay, so this was a previous question. Which of the following influence the bond yields? You know that bond price and bond yield inversely. So Federal Bank, Reserve Bank, inflation and short-term, everything has an impact on bond yields. Okay, so like this they are asking questions nowadays. Okay, so this was a question, previous UPSC question which I was talking about. Which of the following is FDI, they have asked. Which of the following can be seen as FDI? Difficult question. Okay, so you have to use elimination. So first way elimination you can do is remove NRE because it is part of debt. So remove 4. Okay, and then FI with certain conditions, yes, it should be there. Okay, then how do you go ahead with this? What should be the answer? Anybody will try? Foreign FI with certain conditions, FCCB, GDR. But actually GDR also, it is all derived basically. Okay, difficult question basically. Okay, he did not give 2 and 3. And therefore his logic of FCCB you are taking. Otherwise FCCB generally is part of debt only. Only that portion of FCCB which can be converted into equity, only that is basically, that portion which converted is FDI. But what to do? When UPSC is giving such options, you have to check the options and go. This question I have put it because how do you use your logic is very important, more than the concept. NRE you eliminate and then think. And 1 and 2 is not there in the options. Okay, so okay, last question, just see previous one. Answer for this question. Answer for this question. Put it in the chart. Put it in the chart. Others. See, B, don't get confused. No, that option A, B is B. The numbering is wrong there. So you just see A, B, C, D properly. A is one only, B is two only. C is both, and D is neither one. Answer? Answer is both. Okay, the option to convert to equity affords the bond holder a degree of indexation. You are indexed to the risk of rising consumer prices. All English only. Nothing great there. As there is an option to exchange the bond for equity. Convertible bonds pay a lower rate. Yes. 2 is there means 1 is also there. Indexation you are giving means why should I pay more then? So therefore answer is both 1 and 2. Okay. So like this logically there should be some logic we have to use. It's not that all questions we can mark through knowledge only. But definitely we can when others are marking. This question is same for senior and junior, anybody who is writing third, fourth attempt also. He will also think what it is. Okay, so that is the part of planning and all. So before I start, so we are left with infrastructure, agriculture related areas. Okay, so infrastructure, agriculture related areas for revision. These are the things that are left. Before that, I will revise some economic survey related aspects. So these are the two things that are left. Agriculture means that PDS, these areas. Of course, mostly mains related areas are there, like land reforms and all. There you will not find any prelims questions. Okay, so in food processing also. But some areas in the agriculture we will see which may come in the exam. We will see some trends in agriculture, etc. Okay, and some basic areas of agriculture. Okay, so before that, infrastructure also we will revise. See, I'm not removing the answer also, you just see this. Now this is something like a question. Okay, so there such questions, no, difficult to answer. Use logic. You have to use logic with reference to India's property tax collection as per the economic survey. Consider the following. India's property tax higher than. So in our property tax collection, we are not so efficient, first of all. Okay, so there's wide disparity among states. So if at all is asking such questions, near and rear we will discuss. Is it B1, B2? Because B1, near and rear is similar to that only. Okay, I will discuss after the break, don't worry. Okay, so don't worry, I'll explain rear, real exchange, nominal, near and rear both. Okay, so now listen first focus here. I'll explain everything, don't worry. So first focus here. Property tax collection 0.2% only. So use logic, no, India's property tax collection, there is nothing like much we can do. Okay, so India has uniform property taxation practices throughout the country. That is too much for us. Too much for us. So use logic, no, it's not that I will read economic survey only. Okay, such a question in exam, will I take a guess? I will take a guess. Suppose I don't know one also. India has uniform property taxation practices throughout the country. That I will know, definitely it is wrong. One, you may get a doubt. Then also I will take risk. I will mark. So this is how you take risk in the exam. Because everything like factual areas there, it's not that you have read and you will remember. Nobody will remember in fact. Once they mark it right, they feel, oh, I am intelligent. Actually, nobody knows, they'll mark like that only. Okay, so similarly, this non-financial debt I have explained yesterday. Non-financial debt, okay, like bonds, etc. Other countries it improved. India non-financial debt has considerably decreased. It is not increased. Our according to economic survey, our non-financial debt has considerably decreased in the last 12-13 years. Okay, so that is one thing which you remember. Okay, so before talking about infrastructure, there are, of course, this we can't do anything unless and in the budget they have used this word. Okay, so if you read, you mark, otherwise we can't do anything. So there's this like vibrant village program. Okay, so government said we are going to spend around 4,800 crores for vibrant village program. Factual only. Factual, without knowing you what can we do, nothing we can do. 4,800 crores vibrant village program, centrally sponsored scheme. So between 2023 to 2025-26, they said we'll spend around 4,800 crores. Okay, so mainly in the northern border. Okay, so you don't want people to move away from that border. Okay, you want people to stay in that district. So with the help of Gram Panchayats, they have decided to spend money, 4,800 crores for this vibrant village program. Okay, so I think it is clear. Okay, and it is a centrally sponsored scheme, centrally sponsored. Remember yesterday I said there's a difference between centrally sponsored and central sector. So mainly they want to develop solar and wind energy, etc. and proper internet connectivity, tourist centers, etc. The people will not move away from that northern border. Okay, so that is what is this one. Okay, and in the economic survey, this is purely economic survey, purely economic survey. Okay, so we will now somebody see here. Listen. This question look at from that angle where there are extreme numbers. Okay, you don't know. If you have read the survey, this is there. There is something like infrastructure in India Infrastructure Project Development Fund Scheme. Now some changes were done. Okay, so Department of Economic Affairs, now Ministry of Finance is notified this. So this is something like government has allotted some 150 crores from the financial year 2023 to 25. Okay. So for a single proposal, they are going to spend something like 5 crores for a single proposal, and 23 to 25, 150 crore. See that 50,000, 60,000 crore, nobody will spend. Okay, and that too, this is Infrastructure Project Development Fund. It is not for the project, basically, implementation of project. It is for the project development. You got a proposal, you have to coordinate different entities, get everything coordinated, you're preparing a plan basically. So you have to get people working, you have to preparing a draft and all also requires some money. So that is basically done by this Infrastructure Project Development Fund scheme. Basically for preparing a plan, collecting data, all that you are doing, that also involves some money. Okay, for that basically the consultants cost basically, you're taking the care of the consultants, etc. So for that you have this fund called India Infrastructure Project Development Fund. Okay, so 150 crores from financial year 2023 to 25. Maximum amount for a single proposal is 5 crores. Okay, so this is what they are doing. And this is basically funding shall not be recovered. This is not for the project. They are for a single proposal you are giving 5 crore. Now for the consultant fees, etc., getting people, getting proposals and all, you have to pay for them. Nobody do anything free. So you have to pay for them. That is basically 5 crore. Okay, that you, if the project stops also, is not successful also, you're not expecting that money back. Okay, that 5 crore back. Okay, so this is about that scheme. Okay. Now, of course, this I will discuss infrastructure. In infrastructure, in the economic survey, okay. So, in the infrastructure topic, there are 3 things in the infrastructure. One is national infrastructure pipeline, then national monetization policy, and then national logistics policy, and then we have PM Gati Shakti. These 4 pillars, okay, for infrastructure. So in the economic survey, basically national infrastructure pipeline, 111 lakh crores to be spent. 111 lakh crore to be spent in 9,000 projects. This 9,000 project can be both brownfield, greenfield. And specifically if you are taking a national infrastructure pipeline, decided to spend more on energy sector, individually. Road separate, rail separate. Energy sector. Road and rail put together means that is more than energy. So, in economic survey says there will be an inclusion of, or you will add on both Invest India Grid and Project Monitoring Group. Both. These are the 2 wings under the National Infrastructure Pipeline. National Infrastructure Pipeline. Okay. So, I will talk about this. This is there in the economic survey. So there can be a question on Invest India Grid. This is all related to infrastructure. I'll explain that and then we will go to this later. Okay. So I hope you are able to follow. You are there, no? Yes, see the slide there. This I've anyhow sent this slide to you long back. So in the national infrastructure pipeline, government has set a target by 2025, $5 trillion, for which it needs 111 lakh crores for 9,000 projects. So there, this national infrastructure pipeline is basically hosted on this grid called Invest India Grid. Hosted on Invest India Grid. It's a portal. So this is a centralized portal which will mainly track and review. It is a centralized portal which will mainly track and review the project progress. So remember that this Invest India Grid works under DPIIT, Department of Promotion of Industry and Internal Trade, Ministry of Commerce and Industry. Ministry of Commerce and Industry. Put yourself on mute. Okay, so DPIIT. Okay, then you have the project monitoring group. So this project monitoring group is involved in fast tracking, basically, fast tracking of approvals, clearances for projects. Okay, faster approval of clearances, where the project cost is 500 crore and above. So economic survey talks of integrating this IIG and PMG. IIG and PMG, Invest India Grid and Project Monitoring Group. Okay, so in that logic, basically, so if you see this question, 8th question there. That's all. Answer is also ticked already. Observe. Only IRP students also there. What is that? I didn't understand here. I mean for slides. I didn't get you. Like what slides like? Students I didn't understand. Notes. Which notes? This notes, this is, see, IRP for faster revision, I prepared some slides, that's all. Okay, so whatever you want, I will forward. What is there? Okay, so this is for faster revision. You just revise, that's all. Okay. Okay. So again in infrastructure, there is this concept, okay, with respect to public-private partnerships. So PPP is one mechanism. So again, remember, they go deep in the economic survey. That is why you have few more concepts getting added and all that stuff. So, but don't worry, the terminology is important. Now here, public-private partnerships was seen as a solution for infrastructure, okay? And in the recent past also, there was a lot of discussion on PPP. And in this PPP, to make PPPs more viable, there is a concept called as viability gap funding mechanism, where the government itself, the finance ministry itself, funds up to 40% of the project cost. Okay, in this 40%, 20% will come from the government, and there will be a sponsoring authority which is involved in the project. That sponsoring authority will put another 20%. So this 40% is generally a viability gap funding. Okay, so these are basically for the economic projects. Economic projects. But what if it is, see here, viability gap funding, you can see economic sector projects may get up to 40% of capital expenditure, CapEx, as viability gap funding grant. So economic projects means we are viable projects. 40% they are funding as part of viability gap funding. But what if it is a social sector? Now social sector means where you can't expect too much of profits. Okay, so that is basically called as social sectors. So in social sectors, how, if there is a PPP, how is this funding done? Okay, so that is what is discussed here. Social sectors may get up to 80% of capital expenditure and up to 50% of operating expenditure as viability gap funding grant. So social sectors may get up to 80% of capital expenditure, and 80% of capital expenditure government is giving. Up to means not 100%, 80. Maximum is 80. Up to means maximum they can give up to 80. Okay, so that is what is up to there. Okay, so that is what you should understand. So based on that, social sector, and up to 50%, maximum is 50%, up to 50. So which is operating. Operating means day to day, day to day. This is a chart from economic survey. This is pasted from economic survey. Now here what you should understand is this, first of all, viability gap funding should be clear. Okay, for PPP, center is funding, that is the government is funding up to 40% of the project cost as VGF grant. This is for the economic sectors. Social sectors, this chart is for social sectors, which is given in the economic survey. Social sectors, again, there are two sub-schemes in this social sector. Okay, that is social sectors, one scheme, sub-scheme 1, sub-scheme 2. Social sectors, these are. So see here, this table, center 30%, state 30%, okay, private sector 40. Okay, so 30, 30, 40. That means here, sub-scheme 1, capital expenditure, they are giving 60. Private sector is putting 40. Okay, and here for operational cost, nothing is given. Operational means day-to-day recovery, nothing is given. Operational cost recovery, 100% is given. So here the second sub-scheme you see, sub-scheme 2, 40%, 40% center, 40% state. So this means 80% of capital expenditure is coming from the government. 80%. Okay, private is putting only 20. Okay, so then operational cost recovery is only 50% there. Operational cost recovery. Recovery is not there. Day to day also, you can't recover. Suppose hospital is there. Hospital, you are only able to recover 50%. You can't push it on the patients. So again, there, with respect to operations also, center and state are funding up to 50%. Because sub-scheme 2, operational cost recovery is not there. Okay, so recovery means day to day. Suppose 1 lakh has to be recovered on this day, but it is not getting 50% only operating recovery is there. 50, that means 50,000 is got recovered only today. But 1 lakh has to get recovered operation, but it's 50,000 only. Because it's a hospital, you can't recover. You can't put it on the poor patient, etc. So therefore, for that sub-scheme 2, you observe. So operation also, center and state are funding. Center is funding 25%, state is funding 25%. 50% center and state are giving. This is about the So both these sub-schemes, 1 and 2, are for social sector schemes. Social sector, not the economic. Economic 40% only, but for social sector up to 80%. Remember, up to 80% is capital expenditure is given. Operational recovery, operational is also given for certain subsectors where recovery is not there. Their center and state put together, they are funding up to 50%. So this is what is stated in the economic survey with respect to viability gap funding. Okay, so like this, if they ask a question from there, specifically from economic survey, generally difficult question nobody will ask. Okay, so one is this viability gap funding, Department of Economic Affairs, Ministry of Finance. That you should remember. First statement is right. Second statement, social sector. Economic sector, 40% of the capital expenditure. Social sector, up to 80%. Up to 80%. So not up to 100, no, up to 80% of the capital expenditure. So second statement wrong. So like this, if they want to ask a question from economic survey, they may ask. They may, and I don't think they will. Okay. See, schemes and all. This is about the Krishi Udan scheme. Krishi Udan. Okay, so international and national routes. So farmers basically, it's not just about national routes, no, the Krishi Udan 2. So transportation of perishable products from hilly areas, and also now it is available, international routes are also added. So not just national routes, but also international routes. Okay, so assist farmers in transporting agriculture products only within India. No, not only within India. So outside India as well. So this is something which you will remember. So in the Krishi Udan scheme, okay, you have international routes being added. So that is the change with respect to Krishi Udan. Okay, like these schemes are there. There are unending schemes, of course. Yesterday I have discussed this. Okay, so National Housing Banks comes up with housing price index. This is with respect to inflation. Housing price index, basically, given by National Housing Bank, that you have to remember. Okay, so there is this scheme again, survey of villages and mapping with improvised technology in village areas, which is called as Swamitwa scheme. Swamitwa scheme. Survey of villages and mapping with improvised technology in village areas. It's a central sector scheme. Okay, central sector scheme. It's not centrally sponsored. It is completely handled by the center. So it provides you will have drones used to check and collect data. Okay. And it provides a record of revenue, property registered, and issue property cards to the property owners. Okay, so that is the basic responsibility here. So mainly focuses on facilitating monetization of properties. Monetization of properties so that bank loans will be easily available, etc. This is the logic of Swamitwa scheme. Swamitwa. Okay, so See, economic survey talks about navigable length of waterways in different states in the infrastructure topic only. So this is the navigable length of waterways in different states. Highest is West Bengal. Highest is West Bengal. Total navigable length 14,850 kilometer. In that, highest is West Bengal. Least you there is Tamil Nadu in this chart, you can observe. West Bengal followed by Assam, followed by Kerala. West Bengal followed by Assam, followed by Kerala. Okay, so with respect to unemployment and employment related areas, there is this program again in budget and economic survey, which is called as the Digi Saksham program. So therefore it falls under the Ministry of Labor and Employment. And it's a joint initiative of government and Microsoft India. Joint implementation of government, mainly to develop digital skills. Digital skills. Okay, so here you are trying to mainly focus on extension of government programs to support youth from rural and semi-urban. Okay, in this you have both offline and online mode. Training is there, offline and online mode. So here basic questions can be which ministry, okay, joint initiative of Microsoft, etc. So building digital skills, okay, career skills basically. And you have one-to-one training also, offline and online mode. You will have separate mentor, mentoring you, all that. So self-paced offline and online training program on career skills, all this. So this is what is Digi Saksham program. Digi Saksham. This is factual, very difficult to read, or we will see some options and then we will eliminate, and that's how you go ahead. So this is basically called as the digital skills program. Okay, so in news is this area. So from our banking, insurance, monetary policy, current, if I have to look at, you have this program called Emergency Credit Line Guarantee Scheme. Okay, so basically, this is basically to give easy credit under the Atmanirbhar Bharat package to support eligible micro, small and medium enterprises. Okay, so this is basically 100% guarantee is given to member lending institutions through an entity called NCGTC, National Credit Guarantee Trustee Companies. Okay, so this is basically multilateral lending institution. Basically, this is something what you'll remember is only one thing you'll remember. It provides 100% guarantee coverage to member lending institutions like banks, etc. No? So all banks are like member lending institutions which are giving loans to eligible MSMEs. So, but tomorrow there can be some problem. So banks also have to be given some support, and that support is given through this emergency credit line guarantee scheme. Okay, to the banks mainly to promote lending to micro, small and medium enterprises. So about up to 5 lakh crore to eligible micro, small and medium enterprises. Okay, so micro, small and medium enterprises. So this is all like something like from the budget basically, from the budget. Okay, so we'll discuss industry and agriculture after the break. I hope you are following. Yes, students, are you there? Okay, so take a break. See, one more thing. I wantedly showing something from economic survey or some budget and all, and complicated things. Not to let you down. No, that means you may not know, it's okay. So it's not that it will come in exam. My intention is, if at all one line or a factual thing comes from this budget or survey, it may be helpful for you. That's all. Otherwise, concepts are clear, we are okay. Okay, so sometime there can be something that may appear in the exam. So you may eliminate. So that is the only intention. It's not that you'll remember all this. So don't lose your confidence because I'm showing these details. So that is one simple thing which I wanted to mention. No losing confidence. It is only for information. Some information I am giving you with emergency credit line related to, tomorrow he may ask it is related to MSME. So you will recollect, oh, it is MSME, so this statement is right. So that is my logic. It's not that you will be, you have to read and remember every. We can't remember. And now, especially freshers like you can't read everything and keep it. So that is the only intention, not for, confidence, don't measure it like that. Just go through and okay. If one question is added, it's okay. That's all. Okay, so take a break. So one is national infrastructure pipeline, which we have understood. Then national monetization policy. So national monetization pipeline basically focuses on government raising revenues from brownfield projects. Government is going to raise revenue from brownfield projects and use it for greenfield. So government decided to raise around 6 lakh crores. Okay, so 6 lakh crore using this national monetization pipeline. Okay, then PM Gati Shakti. PM Gati Shakti basically it is a master plan for integrated project planning. Okay, so here basically there should be coordination between departments and different ministries to reduce wastage of funds. This is the logic basically. And PM Gati Shakti runs on 7 growth engines. 7 growth engines: rail, road, airport, ports, mass transport, waterways, and logistics infrastructure. Okay, in the NIP, it will be aligned with all these areas. Will be in the NIP will be aligned with the PM Gati Shakti. Okay, then we have the national logistics policy. So according to the definition of government, India's 2017 definition of logistics, so logistics includes these three: multimodal logistics park. Okay, it also includes cold chain, and also warehouses. Okay, so government has defined it in the format like in the economic survey. Multi-model logistics park, minimum investment should be 50 crore and minimum area should be 10 acres. Okay, then cold chain, 15 crores and minimum area 20,000 square feet. Okay, then warehouse 25 crores, 1 lakh square feet. So this is basically a definition given by government. Okay, so multi-modal logistic park is this, where you have interconnectivity. The rail is there, port is there, air is there, goods come there, it will move from there. So this is what is multi-modal logistic park. Okay, so India's case, we have targeted that our logistics cost should be reduced to 8% of GDP by 2030. So we incur a lot with respect to the logistics cost. This has to be reduced to 8% by 2030. So when it comes to transportation and logistics, we have a big challenge. So our transportation is completely skewed where 60% is road. Okay, and there is underutilization of rail and waterways. So logistics performance index, basically World Bank. So India wants to come to top 25 by 2030. India wants to reach this target of top 25 by 2030. So that is logistic performance index. Okay, so then there is also one more index, logistics ease across different states, leads, which is given by the Ministry of Commerce, DPIIT. Okay, so this is on the basis of World Bank's logistic performance methodology only. So Ministry of Commerce, DPIIT, has come up with logistic ease across different states. And it ranks states based on 3 main criteria: infrastructure, services, operating, and regulatory environment. So these are the 3 things which it will take for ranking states. Okay. Then when it comes to rail, etc. Okay, so we have to understand that dedicated freight corridors, basically, major initiatives. Okay, dedicated freight corridor is one initiative with respect to rail. Okay, then we have Gati Shakti multi-modal cargo terminal. Gati Shakti multi-modal cargo terminal. So that means eastern and western dedicated freight corridors get connected along the golden quadrilateral. Okay, so here you can see, then along with that you have Vande Bharat trains. Okay, so built in Chennai, and in this Vande Bharat trains you have something called as a Kavach system. Kavach is anti-collision system. Okay, so anti-collision, all this is infrastructure. So Vande Bharat trains maximum speed 160 kilometers per hour, and it has anti-collision system. So government is also working on development of hyperloop technology. So this is an emerging technology, so which will help in faster movement. So it is basically in collaboration with IIT Madras, Indian Railways and IIT Madras basically. So faster and greener than airplanes and railways basically. Okay, so this is basically hyperloop technology. And then there is also Kisan rail trains. So this will help in faster movement of perishable from surplus region to deficit regions. Okay, so Indian Railways are very much focused on this particular aspect of Kisan rail trains. Okay, and then when it comes to aviation, aviation basically, civil aviation has great potential. Okay, so in India, and mainly Udan regional connectivity regional connectivity system mainly focuses on tier 2 and tier T cities in the country. So more than 1 crore air passengers have availed themselves of the benefit of Udan scheme since its inception. Okay, so government has approved a budget of 4,500 crore for revival of existing unserved, undeserved ports, etc. So Ude Desh Ka Aam Nagarik. Okay, so this is basically a scheme. So for prelims, you have to read like this only. So mains, PPP, public-private partnership, hybrid annuity, and all you will read. Okay. Most of the international trade is handled through ports. Around 90% of international trade cargo by volume and 79.9% by value. Okay, so this is basically ports capacity. Government is also trying to increase the port capacity in India. Okay, so port capacity in India. Okay, so yesterday's class have not done this. Okay, somebody has put like yesterday's class we have done. No, yesterday's class have not done this. Is it? Did we do this in yesterday's class? No. See, this is the inland water transport in the economic survey. So if you observe navigable length of waterways in different states, this is what West Bengal, Assam and Kerala. Okay, so West Bengal followed by Assam and Kerala. See, agriculture sector basically, on an average from 2017 to 2022, it contributes to around 18%. Of course, during COVID, agriculture contribution to GDP has increased to almost like 20%. So India is the world's largest producer of milk, pulses and jute. And India is also second largest producer of rice, wheat, sugarcane, groundnut, vegetables, fruit and cotton. Okay, so these are some bare facts basically. Okay, so India is largest producer of milk, pulses and jute. Okay, now when we talk about numbers basically, so India has one of the largest livestock population. Okay, and largest producer of milk in the world, around 17% global share. Okay, so and second largest with respect to fruits and vegetables, cereals, etc. Okay, so fruits and vegetables, cereals, so clearly visible there in the chart. Okay, this of course in geography you would have done. So Kharif cropping season is from July to October. Okay, July to October during southwest monsoon. Okay, so mainly kharif crops include rice, maize, sorghum, pearl, millet, bajra, finger millet, etc. So I think you have done it in geography, you will be doing it. So basic NCRT, Rabi cropping season, October to March, during the northeast monsoon. Okay, so Rabi crops mainly include barley, oats, okay, mustard, oil seeds, etc. Okay, Zaid crop season from March to June, seasonal fruits and vegetables basically. Okay, pure basic basically. And this you would have done it in geography as well. So some terms basically here. Okay, when I say mixed farming, UPSC asked this already from NCRT. Okay, so if you've not done it in geography, then mixed farming, you have done this in geography? Revision? Yes. Then we can skip this off, that's the reason. Okay, so you have done it in geography? Okay, so nobody, some says no, some says. Okay, fine. See, earlier there was this question on mixed farming. Mixed farming is basically which includes both crop production, raising livestock, poultry. Okay, both put together. That is what is mixed farming. Okay, and rain-fed farming, crop production in areas. Okay, so there is this problem. So rain-fed farming, crop production in areas where rainfall is more than 750 mm. So these are assured rainfall areas basically. Okay. So these are all agriculture revolutions in India. Okay, so factual again, evergreen, overall development of agriculture. Yellow revolution, oil seeds. If you have done it's okay. Otherwise just go through. Silver revolution, egg, poultry. Pink revolution, onion. Green revolution, food grain production. Golden revolution, fruits and honey. Blue revolution, fish. Okay, brown basically leather. Black revolution, petroleum. Okay, so these are all factual. Sometimes there can be a question they can ask. Okay, so aspects of green revolution basically high yield variety, mechanization, chemical fertilizers and irrigation. Okay, so rapid growth in food grain production using seeds of high yield variety seeds. Norman Borlaug was awarded Nobel Prize for Green Revolution, also known as father of Green Revolution. Okay, so Indian father M.S. Swaminathan. So something we know. So mechanization, irrigation, chemical fertilizers, high yield variety. Okay, so Green Revolution ensured food security, employment generation, poverty elevation, production developed. Okay, so all these are the benefits of Green Revolution. Okay, so high yield, employment, production doubled, food security, poverty elevation. No confusion there. Okay, so states which have benefited because of Green Revolution, of course, here wheat and rice region, green area. Of course, they will not ask this anyhow. So these are Green Revolution states. Now, when we use the word second green revolution for sustainable livelihood, so second green revolution was mainly, first green revolution is mainly for food security, as there was severe scarcity of food, 1960s, early 60s, drought and all. But the second green revolution mainly aims at creating sustainable agriculture by leveraging advancements in technology. Okay, sustainable agriculture, we talk about organic farming, etc., and focus on horticulture, all that is part of the second green revolution. Okay, so white revolution, which is basically related to dairy industry. Okay, so Dr. Varghese Kurien, the milkman of India, or the father of white revolution. So white revolution was implemented in three phases basically, 1970 to 80, 81 to 85, and 85 to 96. Okay, so dairy industry first in the world with highest milk production in the world today. Okay, so this is about the white revolution. Okay, Operation Flood for White Revolution basically. So Operation Flood is a program that followed in 1970, initiated by the National Dairy Development Board. National Dairy Development Board to speed up white revolution. So mainly the focus is to increase milk production, rural incomes have to be increased, okay, poverty in the rural areas have to be handled. So this is something like key producers of milk in India. So you can see UP there at the top, okay, UP at the top, 18.8 million tons. Okay, so that is the fact basically, and which you can remember. See, when you're reading for prelim, it should be completely different. Okay, and this basically would have covered in agriculture, but you will remember this graph. No, this is basically Varghese Kurain, Operation Flood. Okay, and then you will also remember National Dairy Development Board to speed up white revolution, and then you will remember UP. Okay, yes. Now, land reforms. So, of course, land reforms for mains, it's a detailed discussion. So, when I use the word land reforms, so UPSC previous prelims question was, what was the purpose of land reforms? The purpose of land reforms is to distribute land from redistributing land to the landless. The purpose of land reforms is to redistribute land to the landless. That is what is the main purpose of land reforms. Redistribution of land to the landless. This question was asked in 2019. Very simple question. And if you read other options, you will get confused. So, very simple question that was asked. Then, what was the main logic of implementing land reforms? Implementation of land reforms. So, one is mainly abolition of zamindars, tenancy reforms, tenant redistribution of land. Okay, so we are talking about land reform. See, what was the problem? British tenure systems like zamindari, mahalwari, raitwari systems created problem. And by the time of 1956-57 also we could observe that more than around 58% of the land was under the control of zamindars. So we can't ensure social justice unless and until, especially in the rural areas, unless and until the land is distributed or redistributed to the landless. And therefore we decided to implement land reforms. And land reforms mainly focused on abolition of zamindars, number one. Number two, focused on tenancy reforms. Tenant. Who is a tenant? Tenant is somebody who works on the farm for meager wages. Tenant is somebody who works on the farm for meager wages. So when we talk about a tenant, so tenant also, there are different types of tenants. So tenants, there are different types of tenant. One is the occupancy tenant. So occupancy tenant is somebody who has some heritable rights on the land. They have some powers on the land. They have some heritable lands on the rights on the land. So those tenants who have heritable rights on the land, they are called as occupancy tenants. Their position is okay. Their position is okay. Occupancy tenant's position is okay. But other two tenants, tenants at will and subtenants, their situation is not okay, obviously. So tenants, so what is the problem? Very high rent. So one is land reforms focuses on zamindari abolition, and tenancy reforms, it has to focus on regulation of rent. It has to focus on ownership rights to be given to the tenant. Okay, and also security of tenure. You cannot push off the tenant. The landlord should not be pushing off the tenant whenever whenever the landlord wants. That is basically called as the security of tenure. Security of tenure. So all this also. Then reorganization. Once you have distributed the land also, small parcels of land everywhere, nothing can be done. So reorganization. So reorganization of agriculture also. That means consolidation of land holding. Consolidate the land and get one piece of land, one big piece. Or even cooperative farming. Cooperative farming. Cooperative farming. Okay, all these are what objectives basically of land reforms basically. One is zamindari abolition. Number two, tenancy reforms. When it comes to tenants, you have to regulate the rent. the tenant is paying, ownership rights for the tenant, security of tenure, reorganization of agriculture, land consolidation, and cooperative farming. All these are aspects of land reforms only. Okay, so be specific with respect to prelims. So removing institutional discrepancies in the agrarian structure, issues of social economic equality, and increasing agriculture production for solving the interrelated problems of poverty, etc. So mainly land records are very important, because though you come up with giving rights to the tenant, if the tenant does not have his name being registered in the land record. So recent past, they are talking about computerization of land records. So these land records were not updated regularly. So if the tenant name is not visible in the land record, then whatever rights that are guaranteed the tenant cannot get it. So therefore, modernization of land records, so you have something like the Appropriate Land Compensation Act at 2013, and Model Agriculture Land Leasing Act 2016. So Model Agriculture Land Leasing Act 2016 came into picture based on T. Hake Committee. This is a factual thing which you have to remember for the exam. Okay, so Model Land Leasing Act 2016 was based on T. Hake Committee. Okay, and then consolidation of land holdings. Okay, why? Because large piece of land only you can use modern machinery, etc. So consolidation and cooperative farming are also part of land reforms. Okay. Then when it comes to subsidies, okay, so one of the important aspect in subsidy is the minimum support price. Okay, so when we talk about minimum support price, so few things which we have to remember for prelims basically. So when I use the word minimum support price, so minimum price for any crop that the government considers as remunerative for farmers, and minimum support prices are recommended by CACP. What is CACP? Commission for Agricultural Costs and Prices. So the government fixes MSPs for 23, and remember, MSP, there is no legal backing. MSP has no legal backing, and it is not an entitlement for farmers. They cannot demand it as a matter of right, because there is no legal market. It is only a government policy. It is only a government policy. Remember that there is no legal backing for MSP. Okay, so no legal backing. It is not a matter of right. It is only a government policy that is part of administrative decision making. Okay, so there is no mention of MSP in the recent farm acts. So of course now farm acts, anyhow they are not going to ask. In our agriculture PPT also it is there, but don't read. Okay, so that is something which you will remember. Okay, but when it comes to fixing of MSP also, the government was fixing MSP using a formula A2 plus FL. So A2 is basically actual cost plus FL. So government said 1.5 increment, that is 50% increment, means 1.5 multiplied by A2 plus FL. 1.5 multiplied by A2 plus FL. Okay, so that is what is the government's logic. MSPs for Kharif and Rabi cropping season. This is based on the recommendations of CACP. CACP will only recommend. Decision is the ministry's decision. Okay, so here now, but farmers are not happy with respect to actual costs. I gave you a detailed agriculture PPT in the class. So the detailed agriculture PPT, you'll find it's not A2 plus FL. Farmers were asking for comprehensive cost or C2. So comprehensive cost will also cover imputed cost on land. Imputed cost on land. It also covers imputed cost of, that means imputed cost of rent on land. So what is the meaning of C2 here? So when I use the word comprehensive costs, so comprehensive cost C2, so it covers imputed cost. It also covers imputed cost of rent on land. That means farmer is working in his own land also. That you have to, if it wouldn't have been his own land, then rent should be taken into consideration. Okay, and it also takes into consideration imputed cost of interest on capital. All this has to be taken into consideration. Okay, so this is what you should remember. So MS Swaminathan and farmers were not happy. They were asking the MSPs to be calculated at A2 plus, they were asking MSP to be calculated at comprehensive cost. Okay, and government was calculating MSP. Government's logic is it has increased it by 50% based on A2 plus FL. A2 is the actual cost. FL is the imputed cost of family labor. Farmers were saying, along with this, we also want the imputed cost of rent on land, imputed cost of interest on capital. So capital, if it would have been my own money, then also interest should be imputed. If I'm working on my own land, then also rent has to be imputed. This also you add. So this was the conflict between them. This was the main conflict that was there between them. Okay, so this is one more aspect which you will remember. Okay, and then when we talk about sugar, so sugar basically FRP is recommended by CACP. FRP, fair remunerative price. Okay, so CACP itself, Commission for Agricultural Costs and Prices, is not a statutory body. It is not. So in prelims they will ask CACP is a statutory body. Statement wrong. So that is how facts become important in prelims. Okay, so you will read agriculture superficially, we'll read, but prelims you have to read what that institution is, which ministry it goes. So that becomes important. So CACP itself is not a statutory body set up through the Act of Parliament. Okay, so it came up in existence 1965 as Agricultural Costs and Prices. Then it was renamed as CACP in 1985. Okay, so now what is the understanding here is CACP is an attached office of Ministry of Agriculture and Farmers Welfare. It is an attached office. CACP is an attached office of Ministry of Agriculture and Farmers Welfare. It can recommend MSPs, but the decision on fixing and enforcement rests finally with the government. Remember, the CACP is only a recommending entity, but ultimately the decision of fixing and enforcement of MSP rests with the government. So, and government can procure MSPs if it wants to. There is no legal compulsion, nor can it force others to pay MSP. It cannot force anybody. So there is no legal compulsion here. Okay, that is what is MSP. There will not be any legal compulsion. Okay, so but when it comes to fair remunerative prices, so fair remunerative prices, FRP we call, so that is compulsorily that has to be paid. So FRP is given for sugar. So FRP, fair remunerative price, that is given to sugar, which is recommended by CACP. This FRP is paid by the sugar mill owners to the cultivators or producers. Okay, and FRP has a legal backing. FRP, fair remunerative price for sugar, has a legal backing, and it has to be compulsorily paid within 14 days. Okay, so this is something like the main difference between a fair remunerative price of sugar and MSPs which are given to the other crops, 22 crops. So this is something which you will remember. I hope it is clear. Are you able to get this? So, yes, are you there? Yes. Okay, that is about MSP and how MSP is fixed and A2 plus FL, but farmers are asking for C2. Okay, more important, no legal backing for MSP. Okay, so of course, this again you will say you would have done in geography. So the word should be clear because there was this question, integrated farming system. Okay, in UPSC prelim. So integrated farming system means integration of farm enterprises such as cropping systems, animal husbandry, fisheries, forestry, integrating everything for optimum utilization of resources, thereby bringing prosperity mainly to farmers. Okay, so that is what uh, integrate. So you should know the words and terms, in agriculture. Okay, so zero budget natural farming. Have you discussed? Have you covered this in geography? Okay, so if you have not, it is something like you can see that person there from Karnataka. Okay, so originated basically grassroots peasant movement originated from Karnataka and spread to other states in South India. Basically, Subhash Palekar was the person associated, and this has become popular as zero budget natural farming. So when I say zero budget natural farming, it is natural farming is to do nothing. No farming, no till, no chemical use farming. It is use of locally available materials. Okay, so seeds treated with cow dung and urine, soil rejuvenated with cow dung, etc. So zero budget refers to zero net cost of production of all crops. Okay, so this is basically zero budget farming. So this is a natural farming without chemicals, natural without using any credit, without spending any money on purchased inputs, a new methodology. Okay, so zero budget, natural farming without chemicals, without using any credit, without spending any money on purchased units. Okay, so here, why? Because mainly cost increased because of liberalization, etc. Privatization, privatized seeds, inputs, and accessible markets, high costs and interest rates, volatile prices of crops. So farmers get trapped in the vicious cycle of interest payment, debt, and all. And that is the reason this concept of zero budget farming. So maybe what is zero budget farming or natural farming? Okay, there can be a factual question, factual question. So like this, they can ask. Okay, so these are the reasons for agriculture distress. Of course, this you need not study. You can directly identify from the options. Like problems of agriculture, 101 problems we can say. Okay, integrated market system is not there. Irrigation issues, rain-fed agriculture, agricultural marketing issues are there. See, when it comes to agriculture marketing, Ashok Dalwai Committee 2017 has recommended, Ashok Dalwai Committee is with respect to doubling farmers' income. So Ashok Dalwai Committee basically says for doubling farmers' income, you have to focus on allied sectors. Allied. So Ashok Dalwai Committee also mentions that agriculture marketing should be shifted from state subject to put it in concurrence. At least agriculture marketing should be put in concurrent list. Okay, so though agriculture is in the state list. Okay, and it also says doubling agricultural exports. Agricultural exports from 30 billion to 60 billion and then subsequently to 100 billion. Because to double farmers' income, agriculture exports have to be doubled. Okay, so here there are many problems are there. So one is basically intermediaries. Okay, farmers being exploited in the APMC mandis. Okay, rain-fed agriculture, irrigation facilities are not there. Okay, there are issues with respect to agriculture credit or basically loan facilities are not available to farmers easily. Okay, fragmentation of land holdings, modern technology cannot be used, efficiency is an issue. Okay, and lack of infrastructure, cold storage, warehouse facilities, therefore wastage, etc. All these are, and exploitation of farmers, especially because of intermediaries. Okay, all these are reasons for agricultural distress. Okay, so one is doubling farmers' income. Earlier it was like, he said we will double farmers' income by 2022. That was a target. So Ashok Dalwai Committee and government has announced a 7-point strategy which aims to double farmers' income by 2022. Double farmers' income that time. Okay, so raising crop production, okay, reducing cultivation costs and post-harvest losses. Okay, so agriculture markets, that is APMC mandis, adding value to farm product via food processing, and risk mitigation through crop insurance, disaster relief. Okay, so these are all part of that 7-point strategy. Emphasis on irrigation, promotion of allied activities. So government of India has announced this 7-point strategy to double farmers' income by 2020. Of course, we could not double, that's a different thing. But of course, there was a focus basically that to double farmers' income, you need to focus on a 7-point strategy. So these are the 7-point strategies. Okay, so raise crop production, reducing cultivation cost and post-harvest losses. So to reduce this post-harvest losses, etc., infrastructure, all this. So ENAM also, ENAM, ENAM electronic portal was brought in. Okay, so food processing, sunrise industry, special focus in the budget on food processing, agriculture market reforms basically. Okay, so why? Because these APMC mandis are, there are a lot of problems in the APMC mandi, wastage, farmer is exploited. Okay, crop insurance, disaster, basically disaster relief and crop insurance for the farmer, risk mitigation, allied activities to double farmers' income. You cannot focus, doubling farmers' income, we cannot focus on purely crop. You have to focus on allied activity and then emphasis on irrigation. This is what is called as the 7-point strategy. Okay. Okay. So earlier they have asked this question. Economic cost of FCI, minimum minimum support price paid to farmers. Okay, so MSP plus procurement incidentals plus distribution cost. So this is basically a prelims question from a mains topic. So the basic public distribution system looks like this. You have the farmer. We have from the farmer, the food grains go to the FCI. From FCI, it goes to the state civil supplies department, and from there to the fair price shops. Fair price shops. So when the farmer is procuring, okay, MSP is anyhow paid by FCI. When FCI is procuring, MSP is paid, and storage and distribution costs are included here. So here FCI economic cost is incurred by FCI. This economic cost is it is minimum support price. It includes MSPs to be paid, and also the procurement as well as the distribution cost, both put together is the economic cost of FCI, economic cost incurred by FCI. Okay, so in the recent past, this economic cost was increasing on a continuous basis, but the cost at which FCI is supplying grains to the state governments, which is called as the central issue price. So what is the central issue price? It is the price at which FCI is supplying grains to the state government. But this central issue price was not changed. Okay, though the economic cost was increasing, economic cost of FCI, central issue price was not changed, it remained constant. So this gap between economic cost of FCI and central issue price was increasing. So this gap between economic cost of FCI and central issue price was increasing, and this increased gap is given as food subsidy by the government. So food subsidy was increasing at a higher level because of this reason. So economic cost of FCI is increasing, central issue price, the price at which FCI is supplying grains to the state government. This was remaining constant. So this gap is increasing, and this gap was filled by government as food subsidy. So food subsidy was increasing. Okay, so that question was asked. some trends, last part only, some trends I wanted to show. One minute. Last 20 minutes only. Just I want. See, this year economic survey, there was no much graphs. But last year economic survey had a lot of graphs with respect to this topic. So, which is useful for prelims. Okay, so this is the last part. See, I have done some themes, some 16 themes and one current affair theme, okay, in my YouTube channel. So there, if you have any doubts also, you can go through those themes. These are all conceptual, bonds on bonds and inflation and all. So if at all you have doubts, I think we have done enough. Okay, but if at all any doubt on one concept like bonds and all, you can refer it there. Okay, now see here, agriculture and food management. This was a previous year economic survey. I'm again repeating, previous year. This year economic survey was also there, but tables are not there in that. Okay, so for us, last 5 years trends he will ask. So for this I need some trends. The agriculture has experienced buoyant growth, okay, and it is accounted for a sizable 18.8% in 2021-22. So here we will remember that around 18% is agriculture contribution to GDP, okay. And 2020-21, it is 3.6%, okay. And livestock sector has grown at a cumulative average growth rate of 8.15. So livestock sector was a major contributor of growth in agriculture in the last 5 years. That is one observation. The factual statement can come in exam. Okay, livestock sector has grown at a cumulative average growth rate of 8.15, okay, in the last 5 years. Okay, so so livestock sector is one of the major contributor of growth in agriculture, means that statement is right. Okay, and government started focusing on food processing industry, a significant employer of the surplus workforce. Definitely yes. Okay, now growth of agriculture and allied sectors, there is no specific trend. You observe this. Was there a continuous increase in agriculture growth rate? Nor continuous decrease is there. There is no continuous increase nor continuous decrease with respect to agriculture growth rates. You observe this. 2016-17 agriculture was growing at 6.8. 18-19 it went down. Again 2021 during COVID it increased to 3.6. So you cannot have a continuous trend which is visible in the last few years. Okay, so continuously increase nor continuously decrease. Last 5 years also, if there is a statement, you cannot comment because 2.6, 4.3, then 3.6. So there is no trend which is visible. Okay, and one more important observation is the GVA of crops went negative in 2018-19. GVA, gross value addition of crops went negative, but still agriculture was growing. This growth was mainly coming from allied sectors. Mainly coming from allied sectors. Okay. Now contribution of agriculture to the total GVA. So there is no particular trend, but from 2018-19 till 2020-21, if you observe, contribution, this is contribution to GDP. 18-19 agriculture contribution to GDP was 17.6. 1920 18.4 and then 2021 it is 20.2. then it has come down again. Okay, so here what we should observe is contribution of agriculture to GDP also, but 18 to 21 there is a continuous increase. 18 to 21. This is agriculture. This is not growth. This is contribution to GVA. Total GVA. What is the contribution of agriculture to total GVA? So that is the trend which you will observe. Okay. So Ashok Dalwai committee also, what I have underlined there, Ashok Dalwai committee on doubling farmers' incomes, he considers, he says, dairying, livestock, poultry, fisheries, horticulture. Okay, so other than the main crop, so allied sectors are more critical for doubling farmers' income. As he has mentioned, growth was mainly coming from the allied sectors. Allied sectors. Okay, so this is important. So this is different sectors which you can see. Okay, observe the graph. Observe the graph. So crops contribution, blue one there, livestock, forestry, fisheries, and aquaculture. Okay, so if you observe that 2011-12, so out of the total agriculture output, crops were contributing to 12.1. 1920, crops came down to 10.7. That means crops contribution to total GV of agriculture has reduced. Last 10 years it has reduced, no, from 12.1% to 10.7. So that is one observation there. Then you observe livestock there. Livestock, it was in 2011-12, it was 4%, 4, orange one, 4. And now 1920, it has almost reached to 5.2. That means contribution of livestock to the total GVA is increasing, So this is one more observation which you can do from this particular graph. I hope it is clear. So allied sector slowly improving, okay, especially livestock. Okay, so India is one of the major oil seeds growing country. So there was a lot of oil imports, etc. Oil was becoming costly. Vegetable oils also was responsible for inflation in India. So this was what was stated in the recent economic survey. And in the previous economic survey also, one of the major oil seeds growing country. Okay, now India, if you will show you a graph, so from 2016-17 onwards, oil seeds production in India has steadily increased. Okay, oil seed production in India has steadily increased. Okay, so but at the same time, oil production is not matching our domestic demand, so we were importing. Okay, so India is one of the world's second largest consumer and number one importer of vegetable oil. Number one importer of vegetable oil. Okay, number one importer of vegetable. Second largest consumer, number one importer of vegetable oil. Now here, trend in production of oil seeds in million tons. Last 5 years, if you see the trend from 2016-17, observe. Okay, so oil seed production was increasing. Oil seed production in India was increasing. So that means imports will have slowly decreased. You're producing more within the country, means import would have decreased. Import would have decreased. Oil seed production increased, means import would have decreased. Okay, so that is what is the observation. Oil imports have reduced, fallen. Okay, but this oil, vegetable oil import is also responsible for inflation. In the recent past. Okay, so oil imports have reduced because we have come up with certain schemes, etc. This is what is stated. Okay, so this is basically production and import of palm oil. Okay, so here if you see, okay, so import of palm oil is more. Okay, 90, here you can see 95 lakh tons, 88 lakh tons. The upper one, these upper arrows, this is what is import of palm oil. Import, 98% we were importing almost earlier. Okay, so this is import of palm oil. This is the production. The bottom one is production. Major chunk we were importing, and major chunk we were importing. Okay, so this is what is one observation. Slow, you just observe it. So 96.8 lakh ton, 83 lakh ton, all this is import on the top line there. Okay, so 89.36. Okay, so this is India imports a lot of palm oil. Sugar FRP we know. Now trends of FRP. FRP trend. See this trend of fair remunerative price for sugar. Trend. Observe the trend only. So FRP 145 per quintal in 2011-12, 2021-22, all more than doubled, almost doubled. See, so FRP for sugar has almost doubled for last 10 years. Last 10 years, FRP for sugar has almost doubled. So this is what is observation from this. FRP, legal obligation, yes, compulsorily to be paid. What is FRP of sugar? That is the cost price paid by the sugar mill owners to the cultivators. Sugar mill owners to the cultivators. We have discussed CACP, MSP, all that. That's all. So from this chapter, that should be sufficient. The graphs of that chapter are more than sufficient. Last 5 minutes, just give me 5 minutes, 10 minutes. Have revised inflation yesterday? Inflation is clear. Okay, so one small area, I think if you have not revised elsewhere, we will. So we have talked about Bretton Woods twins. So when I say Bretton Woods twins, okay, one is the World Bank. Earlier it was IBRD. And when I say World Bank Group, as I mentioned, we have IBRD, IDA, MEGA, okay, and IFC and International Center for Settlement of Investment Disputes. India is not a member of ICSID. India is not a member of ICSID. This is what I mentioned earlier. Okay. And then we have IMF, International Monetary Fund. Okay, so few facts I will mention. Maybe it will be helpful. If you are revising in your international organizations class, it's okay. If you are not revising, then it should help you. Okay, so first thing is, India is a founding member of IMF. India is a founding member. Few things you will remember. So I have not prepared the PPT for this chapter. That is the reason. Okay, so India is the founding member. Okay. Okay, and IMF is basically an autonomous organization affiliated to UN. Autonomous entity affiliated to UN. Okay, and IMF lends or gives loans only to member countries. Previous question. IMF gives loans only to member countries. IMF gives loans only to member countries, not to everybody, only member countries. 2011 prelims question. Okay, it gives loans only to member countries. Okay, and IMF basically can borrow from other institutions, etc. All that is there. Okay, and IMF basically has performed some functions. What are the main functions? What are the main functions of IMF? So first is obviously lending. IMF lends to all member countries. That is something which we have already mentioned. So one is lending basically. So mainly it provides loans to member countries facing short-term BOP crisis. Facing short-term BOP, balance of payment crisis, which we all know. Okay. So it provides financial stability at both domestic as well as global levels. Financial stability. It provides financial stability at both domestic and global levels. Okay, so it looks upon the monetary system, okay, international monetary system, etc. And IMF comes up with publishing World Economic Outlook. Facts these are, World Economic Outlook. Okay. It also publishes Global Financial Stability Report. Global Financial Stability Report. Earlier they used to ask these reports, 3-4 years back, World Economic Outlook, Global Financial Stability Report, these reports are given by IMF. They used to ask, but nowadays they are not asking last 2 years. Okay, World Economic Outlook, Global Financial Stability Report, these are. So when I say World Economic Outlook, basically this is published twice a year by IMF, published twice a year by IMF. Okay, and how member countries' policies are, okay, in the short term and mid term, all these are there in the World Economic Outlook. Okay, and the World Economic Outlook also indicates the risks and uncertainty, okay, that are there that may threaten the growth of the member countries. Okay, so that is also mentioned in this World Economic Outlook, which is published twice a year by IMF. Similarly, it also publishes Global Financial Stability Report. Now, this Global Financial Stability Report is also published by IMF twice a year. Okay, it publishes twice a year. Okay, and it basically how emerging markets, what are their current market conditions, etc. All these are mentioned here, and it tries to figure out financial and structural imbalances in major countries, financial and structural imbalances. Okay, now whenever IMF is going to give loans to member countries, okay, generally IMF lends to other countries using its artificial currency called as SDRs, special drawing rights. Okay, so when I use the word Forex reserve maintained by RBI, when we talk about Forex reserve, when I say Forex reserve, so Forex reserve maintained by RBI, so this Forex reserve mainly has the foreign currency assets. Major component is this only, that is dollar, euro, pound, Japanese yen. So major component. Second major component in our Forex reserve is gold. Third major component in our Forex reserve is these SDRs, which are issued by IMF. So, okay, special drawing rights. These were created in 1970s. Okay, and these are the foreign exchange reserve assets under the IMF. Foreign exchange reserve assets under the IMF. So RBI also maintains these special drawing rights. And fourth is there is something called as the reserve tranche position. Reserve tranche position, or we call it as RTP. Okay, so reserve tranche position, or we call it as the RTP. Okay, now the thing is, once if you have to become a member of IMF, suppose you want to become a member of IMF, how do you become a member of IMF? So now you've decided to become a member of a club, you have to pay some subscription. Similarly, when you want to become a member of IMF, you have to pay some subscription amount. You have to pay some subscription amount to become a member. The more subscription amount you pay, whenever you are in crisis, more you can withdraw. But how much subscription amount you will pay will be decided based on the concept of quota. if your quota is more, okay, you can pay more subscription amount, you can remove more money when you want. If your quota is less, you can only pay less and you can remove less when you are in crisis. So this quota will decide how much subscription amount you will pay. US has the highest quota, around 16.6 quota is there for US. US has the highest quota. Okay, so that means there are certain things that will decide how the quota will be decided. That means a particular country quota, why US has the highest quota. So that quota, based on the quota, your subscription amount is decided. Based on your quota, your voting strength is decided. Voting strength. Each country has a different vote weightage in IMF. But this quota, why is US given so much of quota? Again, that quota will be decided based on certain factors. For example, this quota for US is more because quota is decided based on certain factors like member countries' GDP. First factor. First major factor based on which quota will be decided. 50% weightage is given to this member countries' GDP. 50% weightage is given to member countries' GDP. So this will decide the quota. 50% weightage to member countries' GDP. In that, again, this member country GDP also, market exchange rate using nominal exchange. India's rank is 5. Market exchange rate, 60% calculation will be done. And PPP exchange rate, 40% calculation will be done. PPP exchange rate, 40%. Okay, 40% will be done. So, the first quota is decided based on member countries' GDP. Okay, 50% weightage is given to this quota. Okay, then openness of economy. Okay, or economic, how open the economy is. Economic openness. This is given some 30% weightage. Okay, and then you have forex reserve or international reserves. International reserves, 5% weightage is given. International reserves, 5% weightage is given. Okay, and economic variability. Economic variability, how stable the economy is. Economic variability. Okay, economic variability, around 15% weightage is given. So he will not ask like what is the weightage of each factor for deciding the quota. They will not ask that. So what they may ask is basically quota is highest for whom? US. But quota is decided. Which is the major factor in deciding the quota? Member countries' GDP. So I have written some 5 factors there, like member countries' GDP, 50% weightage is given. Okay, market, then economic openness, 30%, international reserves, 5%, economic variability, 15%. These 5 will decide the quota of a country, and US has the highest quota. So more is the quota, more would be your voting strength. More is the quota, more would be the voting strength. Okay. Now, I think it is clear. Now, when you become the member, okay, so your quota of a country is decided based on your relative weightage or your relative position in the global economy. Your relative position based on these 5 characteristics, based on your relative position, your quota will be decided. Okay, so up to 25% of the quota, or let's say quota is 100 rupees. Quota India has to pay is 100. Up to 25% of the quota can be paid in foreign currency. Up to 25% of the quota can be paid in foreign currency, and this 25% of the quota, which can be withdrawn whenever you want. You can withdraw. This is nothing but the RTP position of India, reserve tranche position. So, which is one of the component of forex reserve, which we say RTP or reserve tranche position. So, when I say quota, so sir, what is your comparable position in the country? It is decided based on these factors. Okay, so based on which your quota is decided. So once your quota is decided, you are paying some money. Okay, based on your quota. In that 25% of the money I pay in foreign currency, and this 25% which I am paying in foreign currency, which I can withdraw, etc. This 25% is what is called as the reserve tranche position. Reserve tranche position. So 4 components which are there in our forex reserve. So one is the foreign currency, dollar, euro, pound, yen, then gold, then we have SDR, and then reserve trunk key position. Okay, so here, okay, these SDR, when I use the word SDR, I think quota is clear. So quota, certain factors are there, and more is the quota, more is your voting strength. US has highest voting strength above 17 to 17.2%. US has the highest voting strength of about 17 to 17.2%. And US, any important decision in IMF, if you have to take, you need the vote strength of 85%. Out of 100, you need vote strength of 85% to take any important decision in IMF. You need the vote strength of 85%. Now, in that 85, US is holding around 17%, means unless US is voting, you can't take any important decision in IMF. Okay, this is one important observation there. Then, when IMF is going to lend to member countries, basically using this SDRs, uses this SDR, which are the artificial currencies of IMF, which are issued by IMF basically. So these SDRs are mainly created in 1970s as a reserve asset under IMF, as a reserve asset under IMF. So, but SDR, the value of SDR, this value of SDR is decided based on valuation of 5 major currencies. Earlier it was 4, and later on Chinese renminbi is also added. So the value of SDR, this paper called SDR value, is decided based on 5 major currencies. What are the 5 major currency? US dollar, maximum weightage is given to the US dollar. For around 41% is given to US dollar. And then euros around 30% weightage is given to euros. Renminbi around 10.9% weightage is given. So you need not remember the weightages also. Japanese yen and pounds. So 5 currencies basically decide the value of SDR. So now important observation is the amount of subscription you make in the IMF is how much you make is decided based on quota. And what is your quota is based on the relative position in the IMF, which is decided based on certain factors like the GDP or economic variability, openness of the economy, reserves you hold. These are the factors which will decide. US has the highest quota and US has the highest voting strength, around 17%. So US, any important decision in IMF, it cannot be taken unless and until US is voting. Okay, so this is one important aspect which we will remember. Okay, so recent past, they have asked one, last 5 minutes only, recent past they were asking, see, you will also, earlier everybody was studying reports only. So why everybody is studying reports, IMF reports and all they were asking, and so everybody started studying reports and going to the exam. Okay, but now they started asking what are the different lending or lending facilities of IMF. So they have asked this last year. So they have asked rapid financing instruments. So one is IMF uses rapid financing instruments. Rapid financing. This is factual. You have to see they are asking such questions. Okay, so rapid financial instruments are used by whom? IMF. That was the question. Okay, rapid financing instruments used by IMF mainly for giving loans to urgent BOP crisis. Urgent BOP crisis. Okay, similarly, IMF also gives something called as the extended credit facility. Extended credit facility. These are all concessional lendings. So concessional lending facilities means you are giving loans at lesser interest kind of thing. Concessional lending facilities of IMF has one is the extended credit facility which is there under IMF. So extended credit facility which is there under IMF, and you also have something called as the standby credit facility under IMF. Standby credit facility under IMF, and you also have something like the rapid credit facility. Rapid credit facility. Rapid credit facility. So these are all concessional lendings in IMF. Concessional lendings in IMF. Okay. So mainly That means here generally what is observation when I say concessional means there is no much of discount. That is what is the observation. So extended credit, standby credit, rapid credit, these are concessional lending. Now in this also there was a question, but if you know it is IMF, you could have marked the answer. If you know it is IMF, you could have marked the answer. It's not that we have to dig deep into it, but at least you should know it is related to IMF, then we can mark the answer, that's all. So these are concessional lendings basically. Okay, so extended credit facility whenever there is medium to long-term BOP crisis. Medium to long-term BOP crisis. Okay, then BOP crisis, mainly for low-income countries. Mainly for low-income countries. Okay, when there is a medium to long-term BOP crisis, extended credit facility. Okay, then we have standby credit facility. Okay, so these are basically loans to low income again. These are loans to low income countries. Loans which are given to low income countries. Loans which are given to low income countries. Okay, so loans which are given to low income countries for short term BOP. Handling short term BOP. Then we have rapid credit facilities. This is urgent BOP needs. Urgent BOP needs. Okay, so these are concessional lending facilities. Concessional lending facilities under IMF. See, at least those words you have to remember, because he asked last time, like, so everybody started mugging up international organizations, reports given by international organizations, etc. All current affairs discussion was on that only. And therefore, he did not give those questions. Okay, so this is concessional. So in concessional, you have extended credit, standby credit, rapid credit. Concessional, we have extended, standby, and rapid credit facility. Then there is also non-concessional credit, which IMF gives. Last 2 minutes. Non-concessional credit which IMF is giving. So this non-concessional credit has extended fund facility. So here you can see this is extended credit facility. Here I am writing extended fund facility. Extended fund facility. So non-concessional means this will be at market rates. Market rates. There is no concession. No concession means it is at market rates. Extended fund facility. No concession. So no concession means it is at market rates. Okay. And then we also have standby arrangements. Standby arrangements. Standby arrangements. Okay. And loans to meet rapid financing instruments. Rapid financing instruments. Okay, not to low income countries. This is basically not to low income countries. These are basically to you're giving it at market rates. Okay, so short term potential problems of member countries. This is basically short term BOP. Okay, and this is here if you see standby credit facility, low income countries. Here standby arrangements basically, this is non-concessional short-term BOP basically. Okay, so like this, of course, what it is he may not ask, but at least he was asking rapid credit facility, etc. These are instruments of what? IMF basically, that you should know for marking the answer. Okay, so last year. Okay, that's all. There is nothing much. So India is a founding member, okay, of IMF. And we should know that India is a founding member of IMF, etc. So rapid financing, these concessional, extended credit, standby, rapid credit. All credit is common. Credit. These are concessional. So non-concessional are you have fund facility and all that. Okay, so that's all. So here one is you will remember the quota part. Okay, and SDR, currencies which. Okay. and voting strength of IMF is decided based on the quota you have. Okay, so that's more than sufficient. Okay, and when you're reading current affairs or international organizations, just don't stick to like what reports they gave. Nowadays, they're not asking reports. Last 2 years, they're not asking reports. Check what are the other things that they can ask. So report, then they've stopped asking last 2 years maybe. So this year, if they ask, then we have to see. Okay, so I hope we have revised maximum possible, and that is, I think that is the end of our economic revision. And one more thing is, so most importantly, go through the previous test papers and just revise the previous test papers once and stay cool when you're going to exam. I don't think economics, very difficult questions will be asked, very simple. Okay, and any other, we have our class on 16th also, so any other doubts, if it is there also, we will take up and do it. So that is, one is land reforms we'll be doing for B2 batch. Okay, so land reforms and food processing is the mains area basically. And then V1 we have to do external sector. And there's an industrial aspect which we do for both the batches together. So that's all. So I hope, any doubt? So we have a very limited voting weightage, like 3.2, 3.3. Is somebody is asking, sir, for B2 batch, is this land reforms enough? Now, this land reform is enough for prelim. Yes, enough. If you ask for prelim, it's more than sufficient. But for mains, a detailed discussion, maybe if you can spend for 1.5 hours with me, then yes. Okay. IRP slides, okay, but some updation, see, I have used so some are not updated much, so be careful. IRP, few slides in agriculture. Agriculture, take the latest data. Agriculture IRP slides, don't go by the previous data. Okay, so that is one clarification in the IRP slides. Okay, so I have used the recent data, but you may don't go according to the IRP agriculture, because agriculture, again, new data has come. Okay, so that's the only thing. Okay, that's all then. Thank you. Anything else we'll discuss later, but I think this is the end of the IRP session. And I hope we have revised in the limited period of time, and just go through what we have revised. Or in 2x speed, any doubt you have, you can go through. And if you revise also, don't read everything possible. Don't read everything possible, what you will do, land reforms, everything, no. So in land reforms, what can be asked? That should be your approach when you are preparing now. Okay. So do we get any notes with regards to this? So I don't know whatever I have written, if you want, we will forward. That's not at all an issue. Somebody asking, do we get any notes and all? So whatever I have written, I will forward it to Akshay sir. You can take it from Akshay sir. Okay, so that's this notes anyhow. We will forward that notes, like slides and all, special slides which we prepared for IRP and all that. That should be sufficient. So that's all then. All the best. Stay cool, and economics should not be an issue at all. 18 questions, at least 16 you can mark 18 to 1 out of 18 to 20. Okay, that's all then. Thank you. All the best.